to see you again, Tom. And yeah, I mean, listen, I don't know what you do at this point if you're one of these automakers, because 1 second it could be 25 tariffs, which would be a disaster for them. The next second it might not happen at all.
Yeah, it is odd, right? It's a very binary situation. Actually, there's some news I think apparently looks like it's hitting saying that maybe it's been pushed to March. So you're noticing that I think GM is up like 4% on this, just literally in the past like 10, 15 minutes. And it was the stock GM was down like you said, 8% since the news was announced. On the same day, they reported a huge earnings performance and guidance above consensus. So clearly the market is really worried about it. The negativity increased there. But what we would do is highlight what happened the first Trump administration, which is there was a threat, then a deal was struck, right, between the U.S. and Mexico, and tariffs were averted. I think the base case assumption people are playing is that that could happen because the downside is like double-digit earnings hits. We saw the stock react to kind of absorb some of the negativity, and now it's rebounding because of whatever this recent news is. But so far, the market doesn't seem to be pricing in a structural long-term tariff hit.
So because I find it a fascinating mental exercise, let's talk about what would happen if these tariffs went into effect. You mentioned a double-digit earnings hit. Some say we should expect car prices here to go up by a couple $1,000s. There's questions about, I think you've made this point, that even the EVs, I guess we make the batteries here and then we ship them to Mexico to be assembled and then they come back in or something to that effect. So it's very complicated.
Yeah, I mean, the devil's in the details of what actually winds up being called out in the formal announcement of what exactly how the tariffs are determined. Is it final assembly where, because there's ways around it. Also, the OEMs like GM, they make pickups, sure, in Mexico. They also make them in the U.S. So they could just increase production, obviously, in the U.S. instead of Mexico. But then what happens to the supply chain, right? Most of the seats are made in Mexico. Those guys can't just change and make seats all of a sudden in the U.S. So those OEMs would have to source the seats from Europe, which would cost a lot. So what would then happen? They would pass that on to the consumer. You and I would pay more for cars, which are already very expensive.
Yeah.
That's why I think most people expect if it does happen, you'll have some inflation, but really more than anything, car sales would just come down. That'll probably be the bigger impact to earnings.
I love the granularity, too, the idea that it could be something like car seats, right? During the pandemic, we saw what happened when a small component of the supply chain is affected, like the chips for moving your car forward and back, and there's no supply suddenly. So, Tom, can you back up for a second? What is the U.S. auto industry would seem to be sort of something that the president is trying to encourage, support, again, to your point, maybe boosting production here, but I mean, it just feels like they would be collateral damage from if the effort is really to crack down on what's happening with the border, with fentanyl, with the trade deficit. The USMCA is up for renegotiation, I think it's called, in 2026. Do you think the auto industry needs to think about this as a bigger existential problem or just a near-term threat?
I mean, we don't know. It's the answer, right? But what I would say is let's look at what happened the first Trump administration, right? These tariff threats were not used because it was a way to generate revenue for the government, right? They were used as a tool to get something totally separate, right? In that case, to your point, you're like immigration or drugs or what have you. Is it any different this time around? So that's, I think, why folks are thinking ultimately this is just used as a tool to get some agreement. We saw what happened with Colombia, right? So get some agreement on a non-autos related issue. So yeah, I do think the autos industry is thinking about it and
Tom,
maybe localizing more. Yeah, that could be happening.
On that note, and as we're speaking, so we're looking at some of the intraday charts and we're showing this effect where we've seen a lot of the automakers affected rebound on the Reuters report that tariffs might be pushed back to March 1, and now they're sinking again. And the reason why is that in the daily White House press briefing, the press secretary just denied that report when directly asked about it and said that the tariffs will be going into effect tomorrow. So now GM is giving back much of that earlier pop. And go ahead, you were saying.
Right. Yeah, well, I guess I was going to go skiing tomorrow, but maybe not. No,
right.
I'm going to have a busy Saturday. Yeah, so I mean, the auto industry probably is, and they were already on this path, right? Remember during the pandemic, there was this big effort to localize more, right? Not be as globalized. So I think that trend was always going to happen. Maybe you localize a little more to prevent this from happening, but it's difficult to make such a structural change. What if this only lasts for 4 years and then there's a new administration that changes it? So I think these OEMs are just waiting to see what exactly happens if a deal is struck like it was the first go around. And then gradually, yeah, maybe localize more. But look, this is a global sector. Mexico is very critical for this industry.
Except for
It'll be
Tesla,
really
which is
hard to undo
ironic,
that.
right? I mean, Mexico is, to Canada to some extent, critical for the U.S. auto industry with the exception of Tesla.
Yeah, I mean, Tesla was going to do Giga Mexico, right? And then I think they saw what could potentially happen and chose not to pursue that path. So it probably worked out there. It could be working out well for them. But the reality is if there are tariffs, that is going to have a negative impact on all these automakers, including Tesla, and the other stuff that comes with this IRA, right, or EV credits, etc. So I don't know if anybody wants to see this happen. I think they'd rather that a deal be struck, just like there were the first go around.
Well, we'll see. The clock is ticking. Tom, thanks for joining us to really cover this live, tick by tick. Tom Narayan from RBC. We appreciate it. Still to come, the IPO market is gradually opening up again, but tech companies are not in the top spot. We'll look at what's in the pipeline and what the emergence of DeepSeek in China means for Silicon Valley's startup landscape. Don't go anywhere. We're back after this.
The Bond Report is brought to you by PIMCO. The Bond Report is brought to you by PIMCO.
The power plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
Exchange. Let's talk utilities for a second. It was such a hot sector all of a sudden, but it ended the year with a whimper, down 8% in December. In fact, having its worst month in over 2 years. Fast forward to today. And even despite this week's DeepSeek-related sell-off, well, now it's up 3% to start the year, having its first positive January, in fact, since 2020. Dom Chu has a closer look in today's Sectornomics over at the CNBC Data Cube.
All right, so welcome to Sectornomics, and the focus today is utilities, and we are, as you point out, Kelly, showing off our new CNBC Cube. It's a new way to look at data and comparisons in the stock market overall using some of our kind of virtual reality, computer-generated image technology. Now, it's not common, but two utilities have been acting like hot tech stocks these days in the past year. It's Vistra and Constellation Energy. Vistra, as you can see here, is up a whopping 316%, making it the second best performer in the entire S&P 500, next only to Palantir. Now, Vistra's performance is triple that of NVIDIA, just to put things in context, over the course of the last year. So far this year, it is the second best performer, up about 28%. It is topped by another utility stock, and that's Constellation Energy. The Baltimore-based company is up a whopping, you can call it now 23, 24. Now, this is now a 34% gain. In the last year, it's the sixth best S&P 500 performer, up roughly 150-some% here, as you can see. Now, Entergy, American Electric Power, also starting the year strong, outpacing the rest of the sector overall. Constellation and Vistra have both benefited from, of course, AI enthusiasm for data centers. Both stocks were hit hard this week by the DeepSeek downturn. Constellation's down 12% for this week. Vistra is down, again, you can see this week as well. Energy, Edison International, PG&E all down roughly 6% this week. But most of the sector is still positive. But as you kind of look at the state of play right now, many of these utilities have traded like tech stocks. We'll see if that theme of volatility in utilities plays out for some of these names in 2025, Kel. I'll send things back over to you from the data cube here.
I want to know what it looks like in there. I want in the cube.
Well, I'll give you a little secret, Kelly. You cannot wear the outfit you're wearing in my fortress of solitude, so to speak.
It looks like a snow cave. Dom, thanks very much.
You got it.
Let's get to Courtney Reagan now for the news update. Hi, Court.
Hi, Kelly. The Defense Intelligence Agency has banned all celebrations related to Black History Month and other, quote, special observances. According to a memo obtained by NBC News, a total of 11 observances are now banned in response to President Trump's executive orders to end any programs to promote diversity, equity, and inclusion in the federal government. The DIA has yet to comment. The mother of the Michigan school shooter, who was convicted along with her husband after their son's rampage, has been in court for the past 2 days seeking a new trial. After yesterday rejecting most of her requests to overturn the verdict or order a new trial, the judge is hearing additional arguments today. And Google is testing a new tool that lets AI call businesses to ask questions for you. The Ask For Me feature collects information about pricing and availability of services, but it's only currently available for nail salons and auto shops. When you enable the feature, Google will ask a series of questions, such as when you want to book an appointment or schedule an oil change. Kelly, I've actually been having my kids practice asking questions themselves when, adults are around, because I feel like they never have to do that anymore, right? Technology does it. You can call cell phones directly. They got to learn to talk to grown-ups.
Yes, they do. And nicely, not stop yelling at me.
Yes, manners. No now. And lots of please.
Yeah. Thanks very much.
Thanks.
See, I'm being polite. Still ahead, Apple is on track to snap a 4-week losing streak with services revenue overshadowing weakness in iPhones last night. We'll look at what's behind the bullishness and an under-the-radar hardware trade on DeepSeek's debut.
To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school. I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make the decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
How much would you pay for luxury travel? A week's stay costs almost $270,000.
It's on the list for $30,000.
From secret getaways to one-of-a-kind deluxe experiences and bespoke services all the way.
The next evolution of the luxury traveler is experiences. Experiences really that money can't buy.
This is First Class, only on CNBC.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today. The day's top stories driving Wall Street. Tyler Matheson, Kelly Evans, Power Lunch, CNBC.
The White House meeting with President Trump this hour as we close out a tough week for the stock. Although big tech broadly has fared okay on earnings this week. Let's talk about all of it. BofA Securities' Wamsi Mohan is here with the key takeaways from Apple's report last night and some opportunities he now sees because of DeepSeek, the same upstart that roiled NVIDIA. Also with us is the man who's literally just written the book on NVIDIA, author and Barron's tech writer, Take Him. And he's not worried. He says the U.S. will win the AI race regardless of this week's developments. Deirdre Bosa rounds things out for us as well. She's been on this story from the beginning and way ahead of the pack. Deirdre, welcome to you as well. Wamsi, let's start with you. Let's talk some Apple and kind of get that out of the way. You like what's going on with the stock here? Look, the revenue's barely budged in 2 years.
Yeah, Kelly, thanks for having me. Look, when you look at Apple, I think the three key things that you learned coming out of this earnings season was the fact that, one, Apple Intelligence is starting to move the needle. It's barely, but it's still starting to move the needle on upgrades. The second thing is that the install base of devices has reached a record now of 2.35 billion units. I mean, that's a massive number, which they're going to monetize on top using services and additional add-on products. And the last thing is gross margins, right? Like, you just had a stupendous quarter of gross margins, and embedded within their guide is actually a huge hit of 70 basis points sequentially from a gross margin standpoint. So when you put those three things together, you understand that this company is built for earnings resiliency. Yes. You just have so much of momentum from services on top of this install base that keeps those earnings estimates stable despite any shortfall that you might see from iPhones.
And the buybacks, of course, which rival, the market caps of many large companies in size in recent years. Wamsi, you say, and I'd like to pivot now and kind of talk about this bigger DeepSeek issue. You see a lot of opportunities in the hardware space because of DeepSeek, and I'd love to just hear more about that.
Yeah, absolutely, Kelly. Look, I mean, it's so interesting to see that now you have models that potentially could be trained on top of already existing large language models for a fraction of the cost. And what does that really mean? It means that the cost of inference is actually coming down. And when we look at companies, we think, what is the big step function change that can be generated because of that? And that's really AI at the edge. And whether it be infrastructure companies or whether it be companies like Apple that have provide devices at the edge, we think that the opportunity meaningfully increases because the amount of productivity that you can bring to your device now, it doesn't need like incrementally a ton more hardware. You can run these languages on very light amount of hardware, and that just brings an immense amount of productivity to you in your pocket. So the way we think about Apple as an investment is it's the LLM in your pocket, right? You have the ability to now run extremely sophisticated models on your iPhone And that, I think, just opens up all kinds of use cases for clients. And then secondarily, when you think about edge devices, same thing applies for Mac and iPads, which Apple participates in, and PCs more broadly, right? But we think that the first end device to really adopt this would be smartphones, because that's kind of what we use the most.
Yeah. So Corning, Western Digital, Seagate, these are all names that you think could be buying opportunities. And also I want to mention HPE. What is going on with them potentially blocking this HPE Juniper deal? Is that out of the new Trump administration?
Well, I think that there is a lot of moving pieces over here, and it's still obviously the DOJ has filed a suit against for blocking this merger at the time being. Now, when we think about HPE as an investment, I think that there's a lot of things that can be done aside from this Juniper deal. When we look at HPE, there's a tremendous amount of cost that can be taken out. We think that the company could earn north of $2.20 just purely from its own cost initiatives that they're taking. And we're in a server replacement cycle as well. So there are a lot of fundamental things that are going on aside from the Juniper deal that make HPE a good investment as well. The Juniper deal is still a little bit in limbo, and we'll see where that goes over time. And if it does close, then obviously that creates additional opportunities for the company as well.
Yeah, no, it's kind of I would almost say a contrarian kind of argument on a day like this. Glad to have it. Wamsi, thanks for joining it. Really joining us, I should say. Appreciate it. Wamsi Mohan with Bank of America. There are lots of questions circulating around NVIDIA in particular this week after the emergence of China's DeepSeek, including whether DeepSeek skirted U.S. export controls to get access to NVIDIA's chips, perhaps via third-party vendors in Singapore, say. For more, let's bring in Tae Kim. He's author of The NVIDIA Way and a tech writer at Barron's, along with our dear Jabosa. Tae, first of all, this book really shows you that NVIDIA, maybe I'm stating the obvious here, this company is no accident. I mean, the level in which Jensen Huang has had to go and reinvent it and shape its culture and drive it over the years is really incredible when you read about it. So I'm curious, first of all, if you have any insight on what may be taking place here with the DeepSeek emergence.
I mean, the funny thing is, Jensen said last year that we need to drive down the cost of computing. He specifically called out reasoning models and inference time scaling, which is exactly what DeepSeek innovated in the past few weeks. So Jensen almost kind of predicted this a few months ago. And he did that with Mellanox when he bought the networking company in 2019. When he actually bought that company, he put in the press release that someday AI workloads are going to work on these massive clusters and networking is going to be a critical component, which is exactly what's happening now with these 100,000 GPU clusters. So NVIDIA wants the cost of AI performance to be brought down, the cost to come down. Jensen has talked about AI inference. The cost has come down 1,000 times in the last 10 years, and they want that to happen over the next 10 years. And if DeepSeek's AI model optimizations actually are replicable by U.S. companies, this is exactly what NVIDIA wants.
But why do they want that? Just because, you'd argue, well, the more that you have to spend on these big workhorse models, the more that benefits NVIDIA.
So there's two components here on their AI training side and the AI inference side. Let's talk about the AI inference. So basically, these DeepSeek models do mixture of experts, number precision. These are all techniques that have been used before, and they've kind of combined them in a very unique and innovative way. So the cost of inference have come down 90%. Now, if you think about it, the first blush, you react to that as thinking, oh my gosh, that's going to lead to a glut of AI computing power, inferences serving the models. But actually, over time, computing history has shown when you get more computing power and put that into hands of the developers, they figure out new applications, new workloads to use it. I mean, there's that saying, oh, you only need 640K of memory, and then obviously that proved false.
Right.
So over time, like researchers, I mean, we have healthcare, drug discovery, trillions of proteins that need to be simulated, robotics. There's these three mega trends that are happening this year right now: multimodal, where you analyze audio and video. There's AI agents. All of these things are happening that are going to require more computing power. So if you have these algorithms and optimization techniques that give you more power, researchers and developers are going to find a way to use it.
Interesting.
And that's exactly what Jensen wants. And this is actually a very bullish thing for the whole AI data center space.
So that then brings us, Deirdre, to the question of what the U.S. should do about export controls on NVIDIA chips. Why don't you first bring us up to speed on what is the latest there?
So I think what Tay's getting at as well is Javin's paradox, right, which Microsoft CEO Satya Nadella brought up at the beginning of the week when all of this broke out into the open, saying more AI basically means more AI. And what Tay's talking about is true. At the inference level, it could require even more compute power. Something that I think may be lost in this conversation, though, is the competition that is going to be coming online for NVIDIA. Without a doubt, NVIDIA is leading edge. It has been the kingmaker in AI in that pre-training phase. In the inference phase, there's a lot more competitors. You have companies like Amazon and Google working on their own chips that are efficient, that could compete with NVIDIA's GPUs that are going to be coming online. And something that I think is really interesting that's also emerged this week is that big tech is just totally embracing DeepSeek. So while Washington is talking about more, export controls to make sure that these GPUs don't get into the hands of Chinese labs like DeepSeek, it's obviously, proven this big breakthrough that our big tech companies are really excited about and integrating into their own platforms. I mean, Microsoft Azure, Amazon AWS this week integrated DeepSeek in a way that isn't just taking DeepSeek, right, but taking the open source model and giving it to their customers in a safer way.
Yeah, Dell is doing the same thing. You can use it on Perplexity. So if you don't want to put it on your phone, you can still access it. So Tay, what do you think? I mean, if I could even put it that bluntly, the U.S. should do. You say you think the U.S. is still going to win the war here. As part of the war, should we be doing more serious export controls or not worrying so much about that?
I don't think you have to worry too much about it. There's no way they're going to. I highly doubt that the Trump administration is going to raise the compute thresholds to let China get the current advanced chips. The reason why I think the U.S. is going to win is that the current Blackwell AI systems are these massive AI server racks with 72 GPUs, all tightly integrated together. They have over 100,000 parts. They weigh 1.5 tons. So in the past, a lot of this is backward looking. You could put like a small chip in your backpack and maybe smuggle it, but that's not
what I've heard. Yeah. So let me just interrupt you there so people know what we're saying. There's been a lot of speculation that these chips, these H800s or H100s are being smuggled into China in suitcases. You say going forward that you can't even smuggle in the latest stuff.
Yeah, I mean, these AI servers that everyone's going to use because they're so much more performant and a massive computing density. Every hyperscaler is buying it right now. They're so big and massive, and you can't ship a 1.5 ton. It's like, come on, it's not going to happen. And these clusters, DeepSeek talked about 2,000 GPUs. The Llama 3 was trained on 16,000 GPUs. Now Llama 4 is going to be over 100,000 GPUs, and then Meta and everyone else is building 1 million GPU clusters. Like these are massive clusters and performance power that China is not going to be able to get. China's not going to be able to get a million GPUs.
And I apologize for running short on time here. Could you still, ship them to Singapore, quote unquote, and they make their way to China?
Not like these racks are so big and weigh so much. I don't think these things are going to be able to be smuggled in any shape or fashion.
Yeah, it's fascinating. And as you say, if all this raises demand for this computing power, we have it, and it will maybe be harder for it to kind of get there in the black market. We'll see. We'll see for sure, and I appreciate the points. Thanks for joining us, Tay. Congrats on the book. It's a great read. Deirdre, appreciate you joining us today as well. Tay Kim, Deirdre Bosa. And still to come, the White House press briefing just ended, and automaker stocks are on the move. The president doubling down on tariffs on Mexico and Canada tomorrow, despite earlier reports it might be March 1. A live report from the White House next. Before we go to break, check out shares of Vertex up 6% after the FDA approved its non-opioid painkiller. You can see the 5.5% pop there. First new kind of pain medicine in decades, although it's about, I think, what did they say? Expensive, $10 a pill, something like that. We're back in a minute. Stay with us.
For as long as I can remember, I have always considered myself pretty ambitious. I always wanted to be a television journalist. When I started out covering foreign exchange, I actually taught myself how to trade currencies because I wanted to understand what people wanted to know. My grandfather, who was a Holocaust survivor, inspires me every single day. And growing up, he always used to have CNBC on in the background. Every day is fun covering business news. Every day is different. It is never boring.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
This is a good global debate.
There is no place in the world where we get the kind of access to so many amazing interviews.
To be able to solve problems at a scale that nobody's ever imagined.
This industry is going through its renaissance.
How big a game changer is this?
Let's go.
Welcome back. You saw the market dipping into negative territory there. The White House press conference just ended with the press secretary reiterating tariffs on Mexico and Canada and China will go into effect tomorrow. Let's bring in Megan Casella, who is in the room. Megan, the president had last week mentioned that the 10% tariff could also on China could also go into effect tomorrow. There was some reporting top of last hour or this hour that maybe the Mexico-Canada piece would be kicked down the road till March 1. What did you hear in the room?
A lot of moving pieces here, Kelly, but we've got some clarity in the room. So as of last night, Trump said that he was thinking seriously about the Canada and the Mexico tariffs, but the China ones seemed to be a little bit further down the road. He said he was still deliberating. In the room, we heard it very clearly that 25% tariffs on Canada, 25% tariffs on Mexico, and 10% tariffs on China are all going to be taking effect tomorrow. I asked specifically whether there would be any lead time as these were implemented, and she said no, they would be in effect beginning tomorrow. Now, the press secretary, Caroline Leavitt, did not have any specifics for us on whether anything would be carved out, on what an exemption process would look like, on whether oil would be impacted. She said all of that would have to wait for the fine print, but that all of that should be publicly available and we can start combing through it within the next 24 hours when we see that formally announced tomorrow. I also asked her whether these were meant to stay in place long term, stay in place permanently, or whether there was a scenario in which Canada and Mexico and China could offer some sort of a concession to get the president to remove or lower them. She said anything like that would have to come from the president himself. She did not want to get out in front of him, but overall a very defiant tone in there, saying these were definitely coming, taking effect tomorrow, and she described them as promises made and promises kept to Americans. Kelly?
All right, Megan, thank you very much. We'll continue to watch some of these affected stocks. It's going to be a busy kind of couple of hours into the close. Megan Casella. And we talked about the close. We've also had the open. U.S. IPO activity picked up in 2024 by about 30%. Just 10 out of the 150 IPOs were tech companies. Compare that with 112 in 2021. That was the bumper year. So what happens this year, especially now that we've learned from DeepSeek that AI startups maybe don't need billions of dollars worth of chips to train their models? Joining us is Scott Rainey, Managing Director of Redpoint Ventures. They just launched their fifth Omega Early Growth Fund, raising $740 million. Scott, a little tight on time here with all the developments in Washington today. And we have an IPO next week, don't we? But again, I don't think it's a tech company.
It has been a slow market. We actually only saw 5 enterprise software-based IPOs last year, although one of them, ServiceTitan, performed extraordinarily well. I think there's demand in the market for these high-growth companies, particularly those that can be impacted by AI. But one of the things I think a lot of companies are considering, especially those that have the potential to go public, is what's the virtue of being public in this environment? The reality is these companies have plenty of access to cash in the private markets to provide liquidity to their investors and to their employees. And given everything that's going on, given how dynamic the environment is right now, the opportunity to be private longer, I think some people regard as a positive.
Yeah, the CEO of Raymond James, outgoing, made this very point on the show yesterday, said more and more companies, because this obviously have a vested interest in this, more and more companies, he said, see private equity as an easier route.
Yeah, it's not only that. It's like if you think about the Databricks and what they've been able to do as a private company over the past year, how aggressive they've been able to move into AI through a series of acquisitions, which might have been difficult to do as a public company. I think some people can regard it as a competitive advantage at this point to be private.
Yeah, you're out of the spotlight. You're allowed to do M&A. You don't have people looking over your... I hate this. How do we change this? It's impossible to, even if it's a deregulatory administration, we're talking about changes that go all the way back 20-some years, and we're at an effort to crack down on fraud.
There's not an easy answer, unfortunately. And I think given how dynamic this market is, given the impact that AI is having, and just look at the news of the past 2 weeks, just how fluid everything has been. I think that you're gonna see more companies choosing not to go public.
Scott, in the remaining seconds we have, and this has been, you've backed a lot into a short period of time, a couple of names you've invested in that you're excited about. Can you tell us about them?
A series of companies. I think we've been very active in the AI space more recently. We've been focused a lot on the applications. I know there's been a lot of discussion this week about how good something like DeepSeek can be in terms of catalyzing AI app development. We've got companies like Abridge that are transforming the healthcare space, Leia in the legal space, and Trunk Tools, for instance, in the construction space, that are basically taking a bunch of manual tasks and turning them into software. And I think the implications are going to be very meaningful. What's really compelling is just how profound these value propositions are.
Yeah.
These companies are growing faster than ever because the value that they're able to bring to the table is so compelling.
No, I appreciate a glimpse into it, and maybe we'll learn more. And it's a home builder next week debuting, sign of the times. Scott, thanks for joining us. I hope to check back in soon.
Thank you.
Scott Rainey with Redpoint. And that's it for us. Thank you for watching The Exchange. I'll join Brian Sullivan for Power Lunch right after this break.
CNBC. Live ambitiously.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
I think the #1 soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
Frank Holland, Worldwide Exchange, CNBC.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
Everything we ever create, it's so a person can do something they couldn't do before.
It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
You guys all have an amazing heart. Okay?
Squawk Box, weekdays.
And welcome to Power Lunch alongside Kelly Evans. I am Brian Sullivan. All right, NVIDIA in the spotlight and in the hot seat. Shares crushed this week. The U.S. government getting involved, maybe. And the CEO is at the White House today. And more questions about where exactly all of its sales may be going. We're going to dig into it all. Plus, Trump wants to hit Canada and Mexico with big league tariffs. Will it happen? And if so, when? Well, the new headline is Monday. We'll talk about the impact and what it may really be. And Kelly, just as we're halfway through earnings, what lessons, if any, can we really learn so far? The great Tom Lee is here to lay out his investing case.
Looking forward to that. Let's check stocks. So we're well off session highs. We've had some pressure in the past hour because of tariffs. The Nasdaq is still leading the way up 0.5%. The S&P is up just a couple points and was within 8 points of its record high earlier. The Dow is down about 0.5%. Despite Monday's big drop, remember that feels like longer ago, the Nasdaq is down only about 1% on the week still, so not terrible. Apple also about roughly flat after earnings. It beat expectations. Services revenue outweighed the fact that they did have lower iPhone sales. It's down a little less than 1%. It's been pretty impressive for a company that's not really growing revenues, growing earnings, especially earnings per share because of buybacks really meaningfully the past couple of years, Brian.
Oh, more on Apple in a bit, but we are going to start with NVIDIA. It's an important story on maybe the world's most important stock. NVIDIA stock now moving a lot right now, but it's down about 12% on the week. NVIDIA stock back to levels not seen since June of last year, and Jensen Huang, the CEO, is now visiting Donald Trump in the White House. What they will talk about, anybody's guess. But we would guess it has something to do with this. Reports the U.S. government may be looking into whether or not NVIDIA products are ending up, maybe illegally, in China. Here's the concern. It's a little bit big, but bear with us. The China-based company DeepSeek shocking everybody and the markets last week, implying it can do AI for far less money and computing power than U.S. companies, which of course are spending tens or hundreds of billions of dollars on NVIDIA semiconductors to do that. And there is growing concern that some of NVIDIA's sales to Singapore may actually be ending up in China, potentially violating U.S. export rules. Because remember, the then Biden White House banned some of the best NVIDIA chips from being sold to China or its companies. Now, NVIDIA's own accounting shows that tiny Singapore accounted for 22% of its global sales last quarter. Yes, well below the United States, but Singapore is above Hong Kong and Taiwan. Think about that. 1/5 of NVIDIA's sales to a city-state that has far fewer data centers than the U.S., than some U.S. states, by the way, or other countries. I want to be crystal clear here. There's no allegation of any wrongdoing by anybody. NVIDIA's own quarterly reports clearly state that where a sale, like Singapore, may be recorded, may not be the final destination of the product sold. You can go look at the 10Qs yourself. So chips sold to Singapore could end up in the United States or elsewhere. The concern of some is, and reportedly now the U.S. government, is that some of those chips may end up in China. Regardless of what the story is or may be, there is that concern. And if NVIDIA's sales start to fall for any reason, it could bring down the stock and thus maybe bring down much of the stock market. NVIDIA, remember, in more than 500 big market ETFs. Let's talk about it all. Joining us now to discuss is May Habib, CEO of Full Stack Generative AI Platform and a writer, and also here is Jordan Schneider, creator of the China Talk podcast and newsletter, and a former China tech analyst at the Rhodium Group. Jordan, I want to begin with you. I laid out there a lot. It's a complicated story. Let me just ask it very clearly. Do you believe that some NVIDIA semiconductors that are being sold to Singapore are actually ending up in China? Your own opinion.
Sure. I mean, I don't want to accuse anyone of breaking the law, but I think it's maybe we can start with another part of that pie chart, which is the 15% of sales that are still going into China. Who's buying that? Tencent, ByteDance, Alibaba, DeepSeek. And these companies aren't dumb, and they know they're not being sold potato chips. The Biden administration, over the course of its tenure from October 2022 up until the last week of the administration, slowly but surely increased the or lowered the ability for NVIDIA to sell chips, but NVIDIA kept making chips that were right on the line. And I think what you saw with DeepSeek, regardless of whether they're using literally banned chips, is the fact that they have been able to do some really incredible engineering with what the U.S. government is allowing to get into China.
Okay,
So
I want to be clear.
Hold
Hold on, because you said it pretty clearly. So you're not accusing anybody, but you think some of these chips are ending up with Chinese companies, which is why we care, because not all NVIDIA chips are banned, but the best ones are. Let me reiterate. I have been to Singapore, but not in a while. It is a small city state. The room for data centers, listen, they're growing. They're still big and fast growing into data centers. But your thought, Jordan, is that it seems weird that 1/5 of their sales is going to a relatively small city state that, while growing in data centers, is hardly Loudoun County, Virginia.
It's definitely weird. And I think another trend that you're seeing is this reselling and this enormous build out we've seen in Malaysia over the past 18 months, where a lot of neo clouds, so not necessarily, Azure or AWS, are popping up that have some sort of Chinese connection. So another way that Chinese firms can get access to this sort of compute is not by directly importing it into the mainland, but setting up subsidiaries or signing partnerships with new cloud companies that have access to NVIDIA's best and NVIDIA's top in class chips, but just happen to be in Johor, Malaysia, as opposed to Shenzhen.
I'm glad you made that point, Jordan. It was exactly the same point that I heard from a friend source who lives in Singapore, which is, look, everybody knows Singapore is a leading re-export hub, but there's also Malaysia right across the border. Singapore may not have the space, but Malaysia has it. So that might be one area to look at in terms of where and who's leasing those facilities. So, May, we talked to Kim last hour, who said, look, even if you could smuggle the old leading edge chips in a suitcase, you won't be able to do that with Blackwell. These things are like tanks. So you're not going to be carrying them into China that way. You're going to have to rely, if you're trying to get around export controls, on setting them up and basically releasing them from other nations.
What we have been saying, Kelly, for 2 years is this big breakthrough, right, that you don't need billions to train state-of-the-art models. We have proven that. We built state-of-the-art models for less than $1 million GPUs, right? I don't think it is a reason to be bearish, because we are on the cusp of an enormous agentic AI explosion that is going to require more inference than folks can even fathom. Whether or not Trump tightens restrictions coming out of his meeting with Jensen today, the only way for the U.S. to stay ahead in generative AI is to continue to achieve revolutionary breakthroughs in training and model architecture. The brute force method for training models is dead.
So, May, what do you think might come out of this meeting? I mean, to Jordan's point, the U.S. has gradually cracked down more and more on what NVIDIA can export. What's at stake here?
So in the enterprise, right, in the U.S., the trustworthiness of these models, the transparency of these models is of utmost importance. If you're talking to an Uber or a Mars, they're not going to use models where they can't audit the training data. They don't understand the provenance. There might be IP issues with now claims that DeepSeek used OpenAI to create synthetic data they used to train the models. So, I think what is at stake from a export controls perspective is much broader than DeepSeek. I think it was Jordan that had said that it's not representative of where their startup ecosystem is, where their generative AI innovation ecosystem is. But really, we are on the cusp of the most incredible explosion of abundance in humanity. And we need every country's most smart people working on this. So wherever they end up, we need the kind of innovation that's coming out of the U.S. and coming out of China.
Yeah, and nobody's, Jordan, I want to be very, very crystal clear. Nobody's saying NVIDIA is doing anything wrong. I want to make that very, very clear. But I think what happened last week is DeepSeek comes out and they're like, listen, we did this basic thing and with 6 hamsters and a wheel, and who needs all that AI money? And everybody panicked and the market panicked and stock fell. And it's kind of the equivalent of somebody coming out and saying, we built a GM Tahoe, but for $15,000 and it, whatever, people are just confused. They don't know what happened. And there's a lot of people that are out there, including some on the air of this very fine network, that have suggested that there's no way DeepSeek is doing what it's doing without using some of these high-end chips and just pretending it's not. I don't know what's true or not. What's your take on that angle?
So I think the Biden administration allowed China to buy good enough chips to do really incredible AI. And what the Trump administration is going to have to think really hard about is whether we should keep selling stuff that, is maybe only just 6 months or a year off the frontier. Lutnick at his confirmation hearing yesterday said, I'm thrilled to oversee BIS and I'm thrilled to coordinate and empower BIS. When we say no, the answer's got to be no. And the truth is that the Biden administration, the answer was, maybe there's a loophole and a year later we'll fix it. And, Huawei is going to find another loophole and then maybe we'll change it 6 months or a year later. And the sort of OODA loop of the Biden administration in closing down these loopholes, allowing Chinese firms to bring into China, much less Malaysia, really excellent chips to train models that can compete with America's is something that the Trump administration to really think about hard if they're trying to envision what an America First AI policy would really look like.
Yeah, and I think the fact that the DeepSeek founder is a guy that runs a big hedge fund, a lot of people like Bill Ackman online have sort of questioned it. We have to go. I have a feeling we have not heard the last of this very important story. May Habib, Jordan Schneider, thank you both very much. Have a great weekend.
Thanks.
Thank you so much.
And China's AI challenge is wreaking havoc on the tech space this week. But listen to this. On the global market front, U.S. tech stocks are still worth more than all European equities combined. And our next guest says the volatility around tech and tariffs is a test that market bulls have passed. Power Lunch. We'll be right back.
For me, ambition and passion go together. One fuels the other. You love something, you want to get better at it. You want to learn more about it. And I think CNBC allows our viewers to fulfill their passions. There's no doubt that the people who watch us care. I am very much focused on trying to land interviews where there's something at stake and asking them fair but tough questions in which their answers are important. I could not imagine covering anything else
the biggest interviews and most crucial conversations on the world's pressing issues. Catch highlights from our unmissable coverage of Davos 2025 this weekend on CNBC.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
Everything we ever create, it's so a person can do something they couldn't do before.
It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
You guys all have an amazing heart. Okay?
Squawk Box. Weekdays.
Squawk on the Street, CNBC.
Welcome back. The Dow is at session lows, down 262 points, as we've had a lot of conflicting headlines, but some confirmation from the White House last hour. Tariffs are going into effect tomorrow, U.S., Mexico, and China. We're also approaching the end of a week that turned out to be a stress test, but for the bulls instead of the banks. Uncertainty around DeepSeek rocking NVIDIA, Microsoft warning about a weak outlook, Apple missed on iPhone sales expectations. With the exception of NVIDIA, broader tech isn't much worse to the wear, though. And listen to this data from BCA Research. For the first time in 50 years, U.S. tech stocks comprise more of global stock market cap than the entirety of European ones. Here now to discuss is Tom Lane, head of research at Fundstrat and CIO of Fundstrat Capital. He's also a CNBC contributor. Daniel Newman is also with us. He's the CEO of the Futurum Group. Tom, let's kind of start with the earnings piece of this. What did we learn this week?
Well, we've learned that a lot of stocks have moved post-earnings, not because of whether they missed or beat expectations, but really what was sort of priced in. I don't think it was just Apple, but it was also Tesla. These are two companies that have really strong moats. I think there was a lot of fears that they'd disappoint, but these results were actually even below expectations, but the stocks rallied. I actually just think this is a sign of a healthy market as well.
Are there any individual names you'd worry about, like a Microsoft, which to our earlier guest point hasn't gone, it had a strong January a year ago, and it's only up 5% since then?
For the Mag 7, when you look at the long-term price histories and you take stocks even like Amazon, there are many years where they are range-bound, and then they break above a range. I think in the case of Microsoft, if the stock has been range-bound for 12 months, I don't think it's actually marking a big rounded top. I think to me it's probably an example of where markets maybe have been too enthusiastic a year ago, but that does give investors an opportunity because the business continues to do well.
Daniel, what did you think we learned from earnings this week?
Yeah, I think there was two big factors, Kelly. It's good to see you. The DeepSeek situation changed the entire trajectory and showed a fragility around this moat in training and how strong the NVIDIA narrative is, but it also was actually incredibly bullish. The understanding of how the diffusion and basically the efficiencies that could come with inference and with scaling laws showed that these companies like Microsoft, Amazon, they have huge upsides. And then of course the Salesforces and ServiceNow is because training isn't the workload. We think inference is 20 times or more a larger opportunity than training. And we actually saw this week that if we could bring those costs down, there's a ton of upside. So the earnings, everyone was looking is where's the AI ROI? That will be the focus of 2025.
Tom, I don't know if you heard our segment on NVIDIA. You don't need to comment on NVIDIA necessarily, but can you tell us how important is NVIDIA to the macro stock market?
Well, NVIDIA is the leading company in the story of AI, so it is a very important franchise. It's a company that the actual lead in terms of developing the best chips continues to be far ahead of anyone else. If there is a change and a fork in the way AI moves forward or the focus becomes more on applications, I don't think it makes NVIDIA any less important, but it does create more upside. AI is a sort of a multi-decade story, and I'm sure there's going to be many story threads throughout that. So I think that the sell-off on Monday was a panic for NVIDIA, but we had highlighted to our clients that it was the 9th worst single-day decline, but the 3 times NVIDIA declined worse when we were not in a broad market, bear market, that was a bottom tick for NVIDIA, and I think that was probably the case Monday.
Yeah, because Daniel, I mean, listen, again, with NVIDIA, who knows where the stock goes? Who knows where all these stories go? Maybe they go nowhere. Maybe NVIDIA doubles from here. But if it goes down, as it's back to June levels, where will that market leadership come from? Do we need a quote, and I'm doing air quotes from the radio, new NVIDIA? Or can the 490 other stocks that we've ignored for 5 years finally carry the load?
Yeah, Brian, I see a broadening out here. I see these greater efficiencies drive better models. They drive more innovation, better models, and that drives more consumption. A lot of people aren't talking about this, but if these co-pilots or agent forces start to be utilized by enterprises, you're talking about what could be trillions of concurrent inferences of these assistants and agents working alongside humans. If they can bring the cost of doing this down, and then they can charge dollars out to these industries, the actual flow of revenue becomes much broader. And I think that's what we all want. It's been a very, very small subset of companies that have benefited from AI in a really meaningful way. What we see now is I think there's demand and desire to see that growth. And I think that's why everyone bought the story. There's a lot of flaws in the story, but the truth is AI will drive trillions in productivity, but it can't be just with 4, 5, 6, 7 companies.
A quick note on that, Daniel. I thought it was very interesting that Broadcom was down more than NVIDIA on Monday. When the narrative is if we're shifting from training to inferencing, shouldn't the custom silicon players, again, I don't know that much about the science here, benefit more, the Broadcoms, the Marvells, and so forth. Is that thesis correct? Is it intact?
I put a note out immediately on that we've been talking a long time about the fact that we've seen certain parts of the NVIDIA moat moving to Broadcom, or you could even say augmented by Broadcom, Marvell. All the hyperscalers are looking to create efficiencies with their own custom silicon, and we're all looking for ways to train for less, deliver inference for less, and create less expensive tokens. And this goes all the way out to the edge with Qualcomm and Apple and other companies that could be big beneficiaries if we can bring AI to devices and to applications at a lower cost and get the consumption and the adoption up, Kelly.
Maybe that is exactly the last question, Tom, I would ask of you, which is this week then a shift from the kind of provider ecosystem, which is NVIDIA and all the utility plays, the power plays, to the user ecosystem, Apple, Meta, the software names?
Well, I think one of the big lessons for me this week, Kelly, is the market broadened on Monday. So if NVIDIA and AI was so central and the moats were so important to the overall U.S. economy, there should have been a bigger takedown for the S&P. But financials and Bitcoin and small caps actually did have a very good week. So I would say that as important as AI is, I do think we're probably overly fixated on AI being the only thing driving equities. We have gotten some pretty good data point even today on inflation. So to me, I think there's a lot of things that are keeping U.S. exceptionalism alive that's not purely AI.
Tom and Daniel, really appreciate your views, guys. As always, Tom Lee, not the drummer. Great to have you on Power Lunch. Daniel, thank you very much as well. Do appreciate it, guys. Appreciate it. All right, coming up, we're going to take a look at the bond market. If that's not enough to hold your attention, I don't know what is. We're back right after this.
CNBC. Live ambitiously. Standard Chartered Global Private Bank, where your life's work lives.
One thing I've learned over the years is don't yell at the stock market. Why do we follow the markets? It's to make money and because it gives us a lens on how the world works. Ambition is the ability to see yourself in the future and to take steps right now in the present to become that future person. CNBC viewers are very ambitious. At CNBC, we are in the dreams business. You're watching to learn something.
I started investing a little money for my dad, and I got bitten by the bug. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
Welcome back to Power Lunch. We've got some breaking news on Meta. Julia Borston with the details. Julia?
Well, Kelly, the Wall Street Journal is reporting that Meta is considering reincorporating in Texas or another state and exiting Delaware. Now, I've reached out to Meta for comment, and they say that this is not true. Meta telling me there are no plans to move the company's corporate headquarters from California, but we have no additional comment. Now, corporate headquarters is different from reincorporating because right now Meta's headquarters are in California, but the company is incorporated like many companies in Delaware. Now, this move would be similar to the move that Elon Musk made, who moved to reincorporate his companies in Texas and Nevada. So certainly something we're watching, but Meta saying that they are not moving their headquarters outside of California. Back over to you.
A couple of thoughts, Julie, on this. Number one, when Zuckerberg made that big announcement a few weeks ago about content moderation, all the changes, he did mention they were going to move the, it's no longer a fact-checking team, the moderators, or whatever's left of it, out of California to Texas. So there's
to Texas.
Yes,
exactly.
one aspect of that already underway. The Delaware issue, I wonder about, because it kind of stems more from the fight that Musk has had with that Delaware judge over his pay package, which, you know, so many in corporate America watching that maybe aren't going to face the same problems that he has, but have considered whether to stay in that kind of default jurisdiction or not.
Yeah, certainly. There's so many different factors at play here. Yes, you're absolutely right. Meta did move its content moderation team to Texas, those fact checkers. And the question is whether the legal residence moves to another state as well. Now, in terms of the headquarters, that is going to stay in California. When it comes to a headquarters, you always have to think not just about where Mark Zuckerberg's primary residence is, but also all of those engineers that are based in the area. But the majority of Fortune 500 companies incorporate in Delaware, and it'll be interesting to see how this all plays out. And we'll, of course, be pushing Meta for more.
All right. Thanks, Julia. Julia Borston.
Yeah, basically, quickly, the idea is that they just want to get away from certain judges, I think, right? Kathleen McCormick, who is the judge that you referenced in Delaware, where they're talking about the pay package. By shifting jurisdiction, you simply shift your possible selection of judges because they have a rotating cast of judges. You're basically saying, I don't like the Delaware judges. I want to go over here.
But again, for Delaware, which a lot of its sort of, its special sauce has been, this is where companies are incorporated, right? This is kind of the default headquarters for corporate America. Sure. So it began with this fight between Musk and that judge you mentioned, but it could turn into something a little bit bigger, and it could be more of a problem for them, some of the institutions there.
Maybe the judges have changed. There's a lot to consider. We shall see. Yeah. But by the way, we have got a CNBC News update. For that, let's get to Leslie Picker.
Thank you, Brian. I'm Leslie Picker with the CNBC News Update. The White House confirmed today that Special Envoy Richard Grenell is in Venezuela to speak with President Nicolas Maduro's government about taking back deported migrants who have committed crimes and to release a number of Americans imprisoned there. The White House says Grenell's visit does not mean the U.S. recognizes Maduro as president after the recently disputed election there. Federal prosecutors today said a man agreed to plead guilty to unsafely operating a drone that collided with firefighting aircraft during the deadly Palisades fire in Los Angeles. The incident grounded those aircraft for several days. In the plea agreement, the suspect will avoid prison time by paying full restitution and do 150 hours of wildfire-related community service. And NASA today became the latest federal agency to ban the use of Chinese AI startup DeepSeek over security and privacy concerns. The Navy made a similar move last week, and Axios reported Thursday that congressional offices were being told that DeepSeek is, quote, unauthorized for official House use. I would expect this is not the last of the groups and the agencies that we hear banning DeepSeek. Brian.
Whatever DeepSeek may be, but we should ask DeepSeek. We'll see. Leslie Picker, thank you very much. All right, let's get a quick check on the market, especially for our listeners in the car. The NASDAQ is up right now, but it's up about 0.25%, and on its way down. It was up more than 1% earlier, Kelly. Now up 0.27%. The S&P 500 down a little, but earlier today was above 6,100. That is a new record. You got the cruise lines, which have done pretty well this week. Let's go down to the bond market with our friend Rick Santelli, because what happens with bond yields impacts stocks.
Yeah, Brian, it's very interesting. You're talking about equities losing a little bit of their mojo into the late session on a Friday. Same is true with treasuries. We're seeing some selling coming in. The 30-year and the 10-year especially is ready to make new high yields on the day. But to be fair, yields are up slightly in the short end. They're up a little more. We're up about 2 or 3 basis points in the 10-year. But on the week, all maturities are lower. 2 years down about 5 basis points. The 10-year is down about 8 basis points. But today, it was all about the data. And I think the viewers, make sure you have your good glasses on, because I want you to look at a few charts and think about what you're looking at. Today, the notion was that the news is good. Austin Goolsbee said we're making progress. Let's look at the progress we're making. These are all one-year charts of all the data points that we had today on inflation. First chart, PCE month over month. It came in today up 0.3. Our last look was up 0.1. That's a one-year chart. Now, let's move to the core. And we can debate whether it makes any sense nowadays to remove food and energy and consider those the important charts, but nonetheless, this is a month-over-month core. Last look it was 0.1. New look, 0.2. Now, granted, there might be some decimal places here, but are we really going to go there? All right, now let's go year over year. This is year-over-year headline, 2.6. Last look, 2.4. Finally, year-over-year core. Now, this is one gets a little dicey. Technically, it's 2.8 last look, 2.8 this look. But technically, if you really want to get down to it, last month was 2.81. This month is 2.79. I say that's sideways. But as I look at all these charts in a very agnostic way, looks to me like they're hunkering down. Looks to me like a consolidation trade. Doesn't look like we're making progress. Doesn't look like we're losing any ground. But to think that we should have our happy faces on, it doesn't look like any of these charts portray 2%. Then we play the game, we analyze. We take the monthly rates for a month or two, and we annualize them to 3 and 6 months. We've done that a lot. And as you see just on these one-year charts, every one of those charts has a point that was lower in the past than it is now. So when you analyze those numbers, you prove to be wrong. Draw your own conclusions. All I'm saying is no matter what tariffs do, standalone data warrants a pause. Kelly, back to you.
Thank you very much for the dissection, Rick. Up next, President Trump's tariffs are likely to kick in tomorrow. If he does go through with it, what exactly will they look like? We'll talk about that next.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Ambition to me is the American dream. It's why my mother came over from Taiwan. It's why people watch CNBC, because they want a better future. I was working as an analyst in Shanghai when my company landed in the news on accusations of espionage. I decided right there and then that I wanted to be on the other side reporting on the news. I love bringing transparency to complicated topics. I think it's so important for us to deliver the right numbers to our audience so they can make better investment decisions. San Francisco was built on ambition, a belief that anyone can disrupt any industry and change the world.
That iconic fashion moment when you're wearing Christian Siriano on the red carpet at the Oscars. What did that mean for you?
I remembered being in drama school and throwing Oscar parties and just saying, I'm going to wear a gown to the Oscar. I'm so sick of that penguin suit. That's all men get to do. I'm going to wear a gown. And I just had the idea of watching this show. If it was a tuxedo on the top, and the shot was here, right? And the first shot you saw was that. And then when it pulled out, you saw a full-on antebellum ball skirt. The world would gag. And gag they did. It takes my breath away. I knew that the idea was great and that it was going to be a special moment. I didn't understand how big. You know, it's like, it's big. It's pretty big.
Frank Holland, Worldwide Exchange, CNBC.
All right, welcome back to Power Lunch. Despite what you might hear, 25% tariffs are set to hit goods from Mexico and Canada tomorrow. There were reports to the contrary, but the White House this afternoon reiterating its intentions to go through with those tariffs. Let's bring in Steve Leisman for more on this, because there were some questions. Those questions apparently have been answered, at least for now.
I hope so here. President Trump, as soon as this weekend, could levy those 25% tariffs. That's what he's saying he's going to do on both Canada and Mexico. Last week, he said the U.S. has been treated unfairly by Canada, saying it had a trade deficit of $250 billion with the U.S. But according to U.S. trade data, the U.S.-Canada deficit is actually $41 billion, or multiples lower than the president has said. A modest U.S. trade surplus, you can see there from 2016 to 2020, turned into a deficit in part because the U.S. economy did better than Canada's. That's what happens when we do well. We import a lot of stuff, but also because of the increased importation of cheaper Canadian oil. We'll talk about that in a second. Now, a White House official telling CNBC the president was talking more broadly, including greater U.S. spending on defense for NATO and NORAD in the imbalance. But the $41 billion trade deficit, it is a rounding error on a $922 billion trade relationship that is the world's biggest partnership. Canada, the largest buyer of U.S. exports, just as the U.S. does, they do have some barriers and limits on U.S. goods. Increasing imports of Canadian oil is a big reason for that surplus, but more importantly, a trade surplus or deficit is not something most economists think matters at all. If we get cheaper oil or widgets or gizmos from Canada and make it into something more profitable, and we give them our funny green paper in return, the U.S. economy wins. The president seems to reject that basic trade, and who better to talk about the sludgy truth of Canadian oil than Brian Heavy Crude Sullivan himself.
That's actually what they call me. There's Heavy Crude in the boys, and then there's Heavy Crude Sullivan. That was my rap name, and then they moved it on. All right, so let's talk about oil, because you're going to moderate here. We're going right at it here.
I'm ready.
So here's the thing. So we're talking about this oil story from Canada, the big part of the story, right? Now, outside of hockey and good cheer, our number one import from Canada is actually oil. It's a couple 100,000 barrels per day, Steve. But that's actually a pretty small amount. So we consume 20 million barrels of oil. That's MBPD, million barrel per day in the United States. We make about 13.2 million. So there you go. The rest, the gap, 7 million or so, is imported. Some of that does come from Canada, which, to your point, tends to produce more sludgy, heavier oil. So who might get hit with higher gasoline prices if the tariff is levied? Well, for those of our viewers who live and work close to Canada, it's you. Almost all that imported Canadian oil, Steve, ends up in refineries. Most of the big ones are in Illinois. One's in Lima, Ohio, and a few, there you go, small ones in Montana. So if you live in the upper Midwest, right, if you're a friend in Fond du Lac, Wisconsin, you're probably going to pay, or maybe even like a Seattle area. But here's the rub. The Biden White House canceled, remember the Keystone XL pipeline?
I do, yeah.
Okay. So there's a lot of confusion. Everybody here on the radio, the Keystone's been canceled. No, it's not. Keystone's been running for over a decade. The XL, which stands for export lead, not extra large. Oh, okay. The kids in the,
what do I would know about
it's
XL?
in the Husky section of the store. The Keystone XL was canceled. That's more barrels of oil per day than would the tariff be levied on. And so if you're worried about inflation, I don't know, do they just bring back the XL?
I am not so dumb as to argue heavy crude with you or oil or anything. My point is that Canadian oil is similar to other issues that are out there. It's something we bring in. We had an economist in Canada calculate for us, Brian, that if we were to replace the Canadian oil with West Texas oil, it would cost us an additional $20 billion a year. Not only that, as you know, we refine some of that oil. You know where we send it back to? Canada. They buy some of the refined stuff from us.
Like Quebec.
Right, exactly. They buy some. It's as if they're the 51st state already. No, but it doesn't matter. We don't have to pay their health care or their Social Security. They give us stuff. We give them stuff. Look at the chart, $922 billion. My only point is that the $40 billion is it's a rounding error. more so than that, it's caused by this recent increase in Canadian oil for which we get a good deal. There's all kinds of products across the spectrum. Now, he may be doing this because of fentanyl, he may be doing it for immigration. More likely, I think he's doing it because he wants a revenue source to pay for his tax cuts.
Fairly said. I will say this, and you're right on everything. A lot with oil, though, you wonder why do we import so much if we make so much, or we don't make it, we drill it, because it's about where it is, right? It's like, we don't want to getting the oil from the Midland, Texas to the middle of Ohio, see what I did there, is a hard thing to do. A lot of it's where it is.
Train.
Here's the thing I would say to the Trump administration. I think Michigan and Wisconsin are pretty important states politically. I'm just told that.
Right.
Do you want to jack up any costs on those people right now?
I think that's an interesting point, whether or not he's going to deal with that, because you're going to have a price level. You may not have an inflation increase as much as the rate, but you could have a price level increase.
Because you could argue that Michigan is the 12th province rather than Canada's the 51st state.
Any way you want to cut it.
25 to 75 cents is what Patrick DeHaan said we could see gas prices go up by if it passed. Big hit if you live, especially in the most likely affected areas. But again, he might. Yesterday he was saying oil might not be part of it. So
right. Well, but the Canadians could also tariff it too. But the point is that we import the Canadian oil because they're a captured seller. They're trying to send stuff out through Alberta, if I'm not mistaken.
Yes, almost
They've got
all
pipelines there, but they sell to us at a lower price, in part because it's heavier, but also because they're captured. They have to sell to us. So
Alberta told me I was feeling lost, lacking in some direction.
That's Althea, but
Althea, yeah, you're right. Sorry about that.
Good stuff.
Alberta's the Eric Clapton song.
Yes, I think this is a big deal. The market doesn't like this all of a sudden. We were puzzling in the newsroom there. Was the market going to react to this? And I mean, it looks like it's off the lows now. Where are we now?
Look just to your left there. You'll
to my left?
Down about 0.5%. Dow's down 2%.
Keep pointing left so you come back this way.
We were down as much as 300. It's interesting. I don't know that this is right now a stock story. I think what it is, it's a business story. It's an economic story. I believe, I don't know what you guys think, that the stocks have reacted to this.
Well, yes, and also because the categories most affected would be basically lumber, housing, autos. That's another one. Fruit, vegetables, oil. I mean, we're talking about essentials and some pretty important categories.
It's a very big deal to be thinking about 25% tariffs on our two biggest trading partners, and the chips are going to fall someplace, and I don't know that everybody's sure where they're going to fall.
We'll ask our next guest. Steve, thanks.
Thanks.
Our next guest is skeptical the tariffs will actually go into place. A lot of people were until, I don't know, maybe an hour ago. Joining us now is Evercore ISI Senior Managing Director Sarah Bianchi. Wanted to give you that disclaimer, Sarah, because what do you think now post-press conference?
Well, I think we're trying to make a distinction between whether he announces the tariffs tomorrow, which I actually do think is likely, and whether he actually then later implements them. So what we expect tomorrow, if there's no deal on the border or on fentanyl, is that he will do some kind of executive order that says we are going to, in the next month, 30 days, by March 1, whatever, put in place, implement these tariffs. It does take time for these to get into the systems at customs and other places.
Right.
So he is going to buy a little bit of time for implementation. And that's really where we believe the negotiation, if the Canadians and Mexicans aren't serious in the White House's view at this point about the kind of demands they want on immigration and fentanyl, they will be by March 1st. And so I do think he's going to make an announcement, an executive order tomorrow. But by the time they're actually implemented in a few weeks, that's where we're much more skeptical.
Sarah, big kind of billion-dollar question here. Do you think it's going to be universal? Do you think it includes or excludes oil? Do you think it ends up just being steel and aluminum?
Well, it's interesting. Normally, President Trump, when we looked at it in Trump 45 or Trump 1.0, he didn't really do universal tariffs. And we did see, as you mentioned, him making comments about perhaps oil should be out of it. And then later there's stories that perhaps there will be some exclusions. I do think ultimately, again, I don't think these will be implemented, but I can see him moving oil out of it. The other big area, and this is on the Mexico side, is auto imports. That would be an enormous impact on GM and other United States automakers. I think perhaps he does a blanket with maybe only the oil exception coming out the door. But again, by the time we get to implementation, if there's anything at all, it will be on a very narrow set of products.
Okay, so you think we get a splashy announcement tomorrow but one that isn't, hey, this takes effect immediately, duck and cover and so forth.
Yeah, they'll still have time to implement. And again, even to get these through the kind of tariff system, if you will, customs, all of that takes a week to 10 days. And I think he'll give a little bit more time again, because here the goal is not, on this issue, I don't think it's revenue or any other really even about the trade imbalance, although he is concerned about what that with Mexico and partner. In this case, I think it is about leverage for these other policy priorities.
For sure. And we've seen Mexican-Canadian stocks turn lower. Their currencies are lower in the sense that maybe this is, in fact, coming. For now, Sarah, thanks. Appreciate it. Sarah Bianchi with Evercore ISI.
All right, on deck, ExxonMobil shares down. We're going to give you details on why in 3 Stock Lunch.
Today's Most Active Stocks Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Most Active Stocks Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
On a $100,000 US margin loan, Interactive Brokers charges just 5.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade is even higher. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
Breaking news, market moves. Scott Wapner from the NYSE. Closing bell, CNBC.
We explore the intersection of innovation, investment, leadership and sustainability in sport.
It's good to try to be sustainable. It's all about technology in the end.
From sailing,
so the athletes have to act sustainably at events and they have to really focus on what are they doing to give back.
To an ancient martial art.
This experience is a new experience. You can think of it as a new discipline. Because of no physical contact, we can fight regardless of the age or gender.
Or in the next CNBC Converge.
Welcome back. It's time for 3 Stock Lunch. And we're going to hit 3 different names today that reported earnings and are on the move this afternoon. Here with our trades is Jessica Inskip, Director of Investor Research at stockbrokers.com. All right, Jessica, let's start with Exxon because the shares are down around 2%. They beat EPS, fell short on revenue. And we were just talking about so many things that could be in play here with tariffs. What do you do with the stock?
Yeah, with Exxon, I actually have a bearish view on this. I think it's finding neutrality, so it's really important for it to actually find support at around 106.84, which is the June and September lows. If we do not find support there and it breaks, we would no longer be in that neutral view, and then I would turn extremely bearish. And it's important to note with my charts, I love to use the 13, 26, and 40 weekly moving averages. Those are rolling quarterly because we look at it from an earnings basis, especially with this segment here. And relative to oil, we have the same view. So very important.
I just want to make sure that Brian heard that you're close to turning very bearish on Exxon.
I am.
Okay.
I am. If it breaks 106.84.
Got to bring inflation down. Drill, baby, drill. I'm not an expert. More of some commodity tends to bring prices down. You know what's not a commodity? Apparently, Uggs shoes or Hoka shoes. Jessica, I don't know what you're wearing right now. You don't have to show us. But Deckers Outdoors, the stock, they make both those brands. Stock tumbling, full year revenue guidance. What's your take on Deck?
Yeah, absolutely. I'm wearing slippers, and you know what? Those actually overtook and were a big trend on social media. So I was surprised with the earnings results here. Nonetheless, Deck, it broke its bullish trading cycle, and that's also turned neutral. I'm watching the support around 185 for this one. If that's breaked, then we're going to have a sell signal on the MACD because we broke that first line of defense at the 13 weekly moving average. If we have any more negative view, it's going to immediately just add to that calculation, which is EMA. So it puts a lot more weight on forward-looking or recent prices, and that is a very strong sell signal. So I'm not bullish on this one either. Neutral, conditionally bearish if it breaks that support line around 185, we'll call it.
I wonder what they do if their competitive edge is eroding. All right, let's move along to Atlassian. Atlassian, why? The shares are at a new 52-week high. They posted better than expected results in the quarter. The stock is up 14%. You jump in here?
I actually would. I think this is a beautiful, beautiful chart. I love pulling this up today. It brought me so much joy. This is in a bullish trading cycle. And you can see I have a longer view here. I'm looking at over a 5-year period. And again, those 13, 26, and 40 weekly moving averages, you can see the difference. Now those are acting as support. The line is sloping upwards. That's giving me an indication that quarter over quarter price is increasing. So from a technical view, that lines up with what we want to see from a fundamental view. Now my resistance right now is around 318, which is testing today. And then from there, it's 352. Yep. And if that breaks, that confirms a big trend, but even more so, we've got a big base breakout, which tells me that this is on its way.
Breakout says Slippers Inskip. Thank you very much. Appreciate it. In step. Thanks for watching Power Lunch.
Oh, it's going to be a busy weekend. Closing bell starts now.
All right, welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with this late day weakness in the market. The White House says tariffs are coming this weekend on Mexico, Canada, and China. Take a look at the majors with 60 to go in regulation. NASDAQ now red. The Dow down about 0.2%. S&P is negative as well. All of this really happening within the last hour after those headlines hit. The market got progressively weaker. We'll see where things head over the final 60. We will ask the Wharton School's Jeremy Siegel what all of this means now for stocks. The other big story we're watching as well, NVIDIA CEO Jensen Huang at the White House today with that stock really on the defensive. The worst week in many months on fears over new AI competition. We'll have the very latest there in just a bit as well. Meantime, Apple shares, well, they are in focus today following that earnings report. The stock initially positive, not so much anymore, giving it all back. Star Apple analyst Eric Woodring of Morgan Stanley here in just a few for his first reaction to that important quarter and what the stock is doing. It does take us to our talk of the tape, tariffs, trade wars, and stocks. Let's bring in our Megan Casella. She is following the latest developments from D.C. Our senior economics reporter, Steve Leisman, with us as well. Megan, first to you. What do we know?
Scott, as of last night, we still thought there was room for negotiations with Canada and Mexico, and especially with China on these tariffs taking effect. But today, the White House press secretary Caroline Leavitt was clear that tariffs on all three of these countries will be taking effect tomorrow. I asked her specifically whether these would be going into effect right away or whether there might be some lead time. She was clear on that point. Take a listen.
The president has made it very clear those tariffs are going to be implemented in effect. If the president at any time decides to roll back those tariffs, I'll leave it to him to make that decision. But starting tomorrow, those tariffs will be in place.
Now, no clarity yet, Scott, on whether there might be any exemption process for these tariffs, whether anything might be carved out, especially oil. There had been some expectation after the president spoke yesterday that oil could be carved out of this. We do think that negotiations with the two countries could be ongoing, but as of now, the latest we can expect from the White House is that fine print should be out on this tomorrow, that should be published within 24 hours, and we can likely expect the president to be making a formal announcement on this from Mar-a-Lago over the weekend. Scott.
Again, the question obviously is retaliation, and we are going to see clearly in the days ahead how these countries respond to what the White House is doing.
Absolutely, and they're very likely to respond. Both countries had been vowing that they were getting their product lists ready. We both saw them retaliate in 2018 when tariffs were first put in place on steel and aluminum from Canada and Mexico. So we know that that's coming. The press secretary was asked about this as well and what that would mean for prices. For example, the Canadian Energy Ministry has been out there saying that oil tariffs plus retaliation will lift gas prices by some 75 cents a gallon. But the White House says that the president has your back, that they will ensure that consumer prices aren't hit too hard in this, but definitely something to watch, Scott.
We will. Megan, thank you for that. Steve Leishman, to you on what the fallout might be for the economy. How are you thinking about this? It's not a surprise.
No, it's not a surprise. Most of what I'm seeing, Scott, suggests lower GDP over time as a result of this, higher prices, though not necessarily inflation, with a real question mark about jobs. All of a sudden, there are people working on both sides of, for example, the Canadian or Mexican border whose jobs may not be the right jobs to have if they're not buying the products because the products are 25% more expensive. So it's a fascinating question right now. We're thinking about how companies will respond. Do they find other sources? Is manufacturing moved to the United States? Do consumers go buy other products and go around? Can they even buy other products? And can these things be made in the U.S. and what kind of time frame that takes? It's a really uncertain thing to try to put into an economic model. It's a reason why the Fed has paused here. It's a reason why I'm seeing estimates of negative 0.3 to negative 2% in terms of, say, a 10-year impact on GDP. Note that I haven't seen any positive GDP impacts. I will say one thing, Scott, which is that one thing I've heard the Trump administration say is that, well, all you economists, you warned about terrible inflationary effects in 2018, and it didn't come to pass. Well, first of all, it seems like those 2018 tariffs were designed not to include products in the consumer price index, but more so, that was a time of low inflation. This is a different time, and so what we could be seeing are potentially worse inflationary impacts from these tariffs, which are one-time price increases, but they could bleed more broadly into the inflation numbers.
Though Steve, the Commerce Secretary nominee, Howard Lutnick, just a day ago, maybe it was two, suggested that it was, quote, nonsense that tariffs across the board are inflationary. Sure, you may get an increase in a product here or there, but the notion that it's going to have a dramatic effect was, in his words, nonsense.
It's a lot of PhD folks that are talking nonsense then, Scott. I mean, I'm a little lost as to in which world you put a higher tax on something and the price doesn't go up. Now, admittedly, there are several routes or avenues to attenuate that full price increase. For example, exchange rates. Take a look at the dollar. The dollar has already offset some expected impacts of tariffs. You can have producers eat some of the cost and the importers or the exporters. But at some point in time, somewhere, somehow, somebody's going to be paying 25% more. That money will not magically appear in the U.S. Treasury coffers without somebody paying it. And most of the economists speaking all of that nonsense with their PhDs suggest that it is the U.S. consumer who will pay it.
That was the considerable debate the first time around, so we will have it again, apparently. Steve, thank you very much for that. That's Steve Leishman, our senior economics reporter. Let's bring in the Wharton School professor and Wisdom Tree senior economist now, Jeremy Siegel. Professor, it's always good to have you, especially when we see a market doing what it is on these headlines. Your reaction is what?
Well, I think, tariffs are the only negative of Trump's economic agenda, most of which is very good. I also, by the way, wouldn't completely give up hope on a settlement. I know a number of people, including myself, that have been in a jury room, selected for a jury, and we're ready to go. Lawyer comes in the last minute and said, hey, we have a settlement, and we all leave. I can't guarantee that. But, the art of the deal for Trump, let's push him to the edge and see what happens. But clearly, if it is 25, and then 10 on China, that is a negative impact on the economy and I think on stock prices.
But then why do you have people like Jamie Dimon, who I think it was in Davos, said get over it, essentially as it relates to tariffs? Lutnick, as I said, the proposed Commerce Secretary, saying the notion that these are just across the board inflationary is nonsense.
Well, it's not nonsense. There is some positive effect. Is it a disastrous effect on prices? Probably not. I mean, I've seen some research that suggests if all those tariffs come in, and don't forget, trade is only, 10% of GDP, and if all those tariffs come in, it might raise the price level by 0.5 or 0.75%, and that's a one-time increase. So, I wouldn't call that disastrous, but that certainly reorganizes supply chains, all sorts of sourcing situations, and it really depends on how long it lasts. I mean, if he puts it on Saturday, I think a lot of people are going to defer for a few days, and then he could reverse it on Monday or Tuesday if another concession is wrangled from Mexico and these other countries. So it's a bargaining tool. Are you going to get enough in exchange for the negative effect of the tariff in and of itself? And I don't think this play is over yet.
Been a wild week, to say the least, given the DeepSeek story, the headlines, the sell-off in tech, what happened earlier in this week, and where we are now. So how does that color your opinion of the stock market here?
Well, I think that, cheaper is better for the economy. Cheaper is better for any AI user. What cheaper isn't better for are perhaps the high-end chip producers. Of course, we all think of NVIDIA as that. And, I'm not an expert in tech. I've been hearing all sorts of stories. Can advanced AI be done on DeepSeek's program? Does it mean advanced AI can be done without the Blackwell chips? I mean, all these questions need to be answered. Autonomous driving, robots, all that. Can that be done with DeepSeek type of transformation? So I think there's still a lot of questions out there. The basic thing is certainly anything cheaper AI-wise is good for the U.S. economy and good overall for the U.S. market.
Yeah, you may not be an expert, as you say, in AI and tech, although you sound well-versed. I will just give you that. And you are an expert, Professor Siegel, on stock market valuations, to which the Fed chair himself this week, when asked directly about economic conditions, financial conditions, called valuations stretched by almost any measure. Now, he was zeroing in, of course, on tech and on AI and those stocks that have done quite well. But what was your view on that comment?
Well, so, we talk about 22 as a forward-looking PE on S&P. I mean, Mag 7, which is the, 493 other stocks, it's around 19, which I don't think is an unreasonable PE given the entire economy. So the question is, can the Mag 7, which has done unbelievably brilliantly over the last 2, 3, 5, 10 years, maintain its prominence? And of course, what happened Monday says, well, maybe margins can't stay as high for some of them. But then again, some of these others are going to be users of it and actually have gone up after the DeepSeek. So not all Mag 7 is going to be negatively affected. So yes, Mag 7 is a singular event. We've never had it in the 200-year history of the U.S. stock market, X the Mag 7, I do not think the stock market is overvalued.
But does this threaten that trade, which many people have obviously gone heavily into over the last 18 to 24 months?
Yeah, well, you know, the trend and the AI narrative is extremely strong. My research shows that it's very hard to topple a trend. It usually takes more than one blow. You know, it's like a prize fighter up there, takes a blow with the head and all right, and continues on. It would take something else, and then it's like a tipping point. I'm not saying that tipping point is going to happen, but if all of a sudden people say, hey, I can reproduce the Blackwell performance with cheaper chips, whoa, then you're on the next side of that story. And if margins go down on some of these other Mag 7 stocks, that becomes the other side. So this is, usually need 2 or 3 blows to break a trend that is as strong as the AI narrative is. And you could say Monday is blow number 1. Doesn't mean that 2 or 3 are coming soon, but it means you got to be on alert.
I mean, Wednesday may have been blow number 2 in terms of this market thinking that you're going to get a lot of rate cuts this year, right?
Well, I mean, we've talked about that, and I've been doubting that for a long time. Actually, if you want to know the truth, I thought that Powell's presser was more dovish than I thought. And he said, yeah, I still think we're very restrictive. And I mean, because not every FOMC member actually thinks that. I mean, really, let's face it, it's 1 to 2 cuts at most this year, and I wouldn't be surprised at 0. I think what's much more important is what happens to the 10-year. And by the way, I think the 10-year is really going to be dominated by what happens on the deficit, and particularly taxes, which we know, you know, there's an omnibus bill, so to speak, is being formulated by the Trump administration. How much are they going to include of all the Trump tax cuts? That's when the bond vigilantes are going to be looking out and saying, hey, you can't put all the goodies in that you wanted to.
You think we're going to get another rate scare?
I think that's going to be more important on the interest rate front than whether we're going to get 1, well, a 0, or even 2 25 basis point cuts on the funds rate.
You think, forgive me for talking over you, Professor, do you think we're going to get another rate scare, a backup? Because, you know, it looked like the 10-year was going to knock on the door of 5%. Now we're at 4.56 on the 10. The 2 is at 4.22. So how do you see that? Because that spooked the stock market for a little while. Yeah. Clearly, they came off the boil, and then the market felt a little bit better about where we were.
Yeah, and really, no question that higher yields are a challenge for the market. But we also have to remember that throughout history, the 10-year on average is 100 to 150 basis points above Fed funds. I mean, that's over a half a century average. Fed funds are now 4.33. So you're really talking about, you know, 5.25 to 5.75 would be the normal range of the 10-year. So you know, my feeling is I would be surprised to see much of a decline in yields, even though I'm relatively more optimistic about inflation. I think the deficit and economic growth. And by the way, AI is if that cheap AI promotes economic growth, that's great for the economy, but it also means higher interest rates. Higher interest rates mean more are caused by that higher growth. So, you know, I think the challenges are still on the upside for yields, and we're not yet at a normal term structure.
Professor, stay with me. Just a quick market check. Dow down 328 as we speak, almost 0.75%. S&P negative by 0.5%. And then the NASDAQ, which was up, is now red. And we'll track all of it as we bring in JP Morgan Asset Management's Mira Pandit and BMO Wealth Management's Young Yu Ma. It's good to have you both. It's nice to have you here, Mira. You've heard what the professor had to say. You've seen the news that Megan Casella delivered to us and the analysis that Steve Leisman brought us as well. What's your view?
I used 2018 as a case study of how we think tariffs will impact the markets. So you had this drip feed of tariffs throughout 2018, and while that did cause episodes of volatility in the markets, you're seeing that today and right now, ultimately we also had a massive tax cut both for consumers and for businesses, and that resulted in 21% profit growth. And that really supported the market for the majority of 2018. And this year, analysts expect about 15% profit growth. So that could continue to support the market, those types of fundamentals. However, the cautionary tale of 2018 is that we expect politics to be unpredictable, therefore volatile markets could digest that. We don't expect monetary policy to be unpredictable. And what ultimately unseated the rally in 2018, because we had 19 new all-time highs in 2018, was the fact that the Fed got a little more hawkish towards the end of the year. Markets got spooked. The Fed wanted to continue to cut into 2019, and that's how we ended up with a down year. So expect that monetary policy could be the unpredictable and unexpected dark horse this year.
Hello, volatility, Young Yu. I think that's the point of what Mira is getting at. Maybe, you know, the longer destination is still in our sights, but it could be some twists and turns along the way.
Yeah, thanks, Scott. Great to be here. We do think that's probably going to be the course of the trajectory this year. Bouts of volatility, underlying fundamentals, both with consumers and corporations still healthy, productivity really kicking in and helping to spur that economic growth. Probably actually in our estimation, moderating inflation. We think productivity will help to alleviate some of the labor market pressures that might otherwise have been there with that degree of growth. But we do think that volatility is going to be significantly higher this year, but probably higher in the first half of the year as we're working through some of these initial deals, initial negotiations that could drag out a few or even several months. It's probably going to be a bumpy path, and today's announcement, although to some degree there was some surprise that some elements of a deal were not reached or at least not alluded to, we do think that tariffs is something that is going to be with us for some time. It's going to roll through region by region and country by country here.
And Professor, what happens if that's the case? In fact, what happens if these aren't temporary? What happens if this is no art of the deal? What happens if, as Steve Leisman points out to me, to tell you directly, this is how the president wants to pay for his tax cuts? He wants to have revenue coming into the government to cover the cost of what he wants to get done fiscally. And he wants to get even more than he did last time done.
Well, first of all, if you do the math in any way, the tariffs can't pay for all the tax cuts that he has said that he wanted to. Even with the 25 or 30 on Mexico, Canada, Europe, and even talked about 60 on China. He's starting out 10 on China, and he had talked tougher on China earlier on. It doesn't generate enough revenue to cover all the extra tax cuts and the extension of the 2017 tax cuts. We should also remember we went from 36% down to 21% of corporate rate, a huge reduction in that rate. What Trump is talking about now is down to 15 for that part of production or firms that produce in the U.S. So the magnitude of the corporate tax cut is much lower going forward than it was in his first tax program.
Mira, are you reassessing the tech trade after the events of this week? I think it's the most important question in the market, with all due respect to the tariff breaking news and the impact of the market, which isn't even that dramatic. But this is the largest part of the S&P 500. It is probably the most crowded part of the S&P 500. The biggest market cap companies on this planet are within this group of stocks.
If we take a look at what's been happening from a broadening out perspective, the good news is it's not a market crash and it's not a wholesale sell-off. It is a rotation. And what you've been seeing is that rotation has been in train. In 2023, 63% of the overall market returns came from the Mag 7. In 2024, it was 55%. Year to date, it's actually zero. It's actually a flat contribution from the Mag 7. In fact, the Mag 7 are on two different ends. There's big dispersion here where the top 5 contributors, half of those are Mag 7. The biggest detractors in the S&P 500, those 10 worst detractors, those are the other half of the Mag 7. So dispersion in the Mag 7 is an important point to point out because there are going to be winners and losers here. I do not think this is the end of the AI trade, but it is phase 2. And this is the natural evolution of a technological revolution. You have a concentrated number of players, then you get more beneficiaries, more players, more different competitive landscape. And essentially, I don't think that the capex that's going towards this innovation is unwarranted as long as we can continue to advance the goals. The LLMs that we have now are just the building blocks. We need to have more advanced technology, and that is what's going to allow incumbents to stay in place.
Young Yu, what happens if these stocks, if nothing else, are just in the penalty box for a little while? Is there enough elsewhere to keep this market climbing, even in the face of this tariff news?
Well, I think there's probably enough there to keep the market treading water, but we do think that this tariff news perhaps changes the market psychology of looking at developments, whether it's the Fed, whether it's spillover from negative earnings reports, changes that psychology from a glass half full to perhaps a glass half empty until some of this gets worked out. So the prospect for downward momentum in the stock market is certainly elevated or higher than it was just a few hours ago. But we do think under the hood there are good things happening in the economy and with companies. Corporations, balance sheets are strong, consumer spending is healthy, and we do think productivity is really going to be something that is very impactful this year and surprises to the upside. We think ultimately that's going to pull us through, but in the meantime, there could be some prospect of downward momentum if we get this tit for tat, especially with other countries doing retaliatory tariffs.
All right, we'll see what happens over the weekend and then as we begin a new week. Good weekend, everybody. Thanks for the conversation. I appreciate it. Professor, we'll see you soon. Mira, of course, and Young Yu as well. To Seema Modi now, who is tracking that other big event this afternoon. NVIDIA CEO Jensen Huang at the White House today. What are we learning here, Seema?
Scott, we've also learned that, according to a source, that in addition to meeting President Trump, NVIDIA CEO Jensen Huang also meeting with Commerce Secretary nominee Howard Lutnick at the White House, where he's discussing China restrictions and ways to revamp the CHIPS Act, which is seen as key to our country's national security. Now, Trump, we know, has been meeting with a number of tech CEOs in recent weeks, but it is the first one-on-one meeting with Jensen Huang since Trump took office. We're told Huang is keen to discuss the new chip licensing requirements that were unveiled by the Biden administration that would severely impact shipments of graphic processing units to a long list of countries, including countries like Israel, which is considered a U.S. ally. Trump does have the power to reverse this ruling. The question on Wall Street is, can Huang convince Trump to do so? We know DeepSeek is expected at least to be a part of the discussion between Trump and Huang and how it informs U.S. policy on artificial intelligence as the White House tries to figure out what type of restrictions and export controls on China would be most effective. Scott.
All right, we'll see how all of that transpires, too. A few weeks away from earnings, quiet period, not much they can say. And to some, that has been a little unsettling, giving all this important news this week. Seema, thanks. Seema Modi. We're just getting started. Up next, star analyst Eric Woodring is back with us. We get his first reaction now to Apple's earnings, stock move as well, which has been a story in and of itself. He joins me right after the break here at the New York Stock Exchange. You're watching Closing Bell on CNBC.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation, and startups from one place. CNBC.com/technology.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
Tons of stuff to be done. The clear issue that we have that our trend growth has come down massively down. And we need to convince ourselves, certainly our political leaders, that it's not just about just growth and inclusive growth, but you have to have growth in the first place.
We are not, respectfully to Larry, a museum. We are at risk of becoming a museum. But who develops the latest vaccines? I mean, a lot of the innovation is actually happening in Europe. Yeah. You know, we have a huge amount of startups. Issue is that they start here and then they go to the United States.
We still have a significant part of our revenue in Europe.
That is our traditional stronghold, even though we have grown our American footprint, we've grown our Asian footprint quite a bit over the years. But investors see our exposure to Europe, and I think there is skepticism about this. And the environment as it relates to global trade is complicated.
I'm going to show you some cool stuff, Nessa.
Yeah,
See this?
absolutely cool. That's a mask of your face.
Rajat Maheshwari is part of the Cyber and Intelligence Solutions team at MasterCard. In his role, his team develops tools to manage customer risk and prevent scams. Part of his role involves getting in the mind of potential fraudsters by creating fake identities.
So these are synthetic IDs as good as a genuine ID. You can have these identities, you can have the face mask, that person can do anything with these.
Right.
This was done by a Japanese artist who did the mask for James Cameron movie Avatar. Sometimes we have to think like bad actors to come up with the solution which can stop these things. You have seen that the world has evolved from these masks, and now the deepfakes are coming in. The intent was not to break the technology, but the intent was to help the solution providers.
That seems to be the major takeaway from the market on Apple's earnings. The stock giving up earlier gains, though, despite beating on its guidance. Offsetting weakness for the iPhone, sales in China. For his first comments on the quarter, let's bring in Morgan Stanley star analyst Eric Woodring. Welcome back. It's good to have you back on this day.
Thank you, Scott. Thanks for having me.
On the price action, for starters, what do you make of the stock? Up, then roll.
Sure. So stocks opens about 3%. Listen, let's put that in context. My estimates went up about 1.5%. So 3% felt like a bit much. But at the same time, what have we heard now? We've heard about the implementation of tariffs. Where does Apple source most of its product from? China. The natural progression of tariffs on Canada and Mexico progressing to China is a headline negative for most of my group, inclusive of Apple, just given where their production stands. So I do think that the fate in the stock is more reflective of what we're hearing from the macro side of things, as opposed to micro or reaction to earnings.
Your own takeaway was better than feared, correct?
It was exactly right. And maybe just to explain that, an inline December quarter, largely as we expected, really strong gross margins. Impressive services growth of 14%, a bit better than we expected. And then for the March quarter, we had expected a guide down. We were 2 or 3 percentage points below consensus. We got a guide that was about $1 billion higher than where we were. I would consider that better than feared. There are still challenges that Apple faces in the near term that they do need to overcome. But in light of where expectations were, a midpoint of $94 billion for the revenue guide was, as I've termed it, better than feared.
Your bull case is 350. How do we get there?
You need a cycle. Well, I should say this. You need 3 things to work in tandem. You need an iPhone cycle. That would be both iPhone unit growth and iPhone ASP growth. That comes from both Apple Intelligence upgrades, pent-up demand, and new form factors. You need strong services growth, right? Apple just added 90 million new users in calendar year 24. You need those users to spend. If you say that those users spend as much as the existing Apple user, that's about $30 billion of incremental revenue, not necessarily just in fiscal year 26, of course, but over time. And then the third thing that you need is gross margins. You need gross margin expansion. Right now, I think we're looking at some real nice gross margin expansion, obviously, in the company. That's kind of a check the box. Services is outperforming expectations. The question comes back down to iPhone units in particular.
You didn't say China. There wasn't a fourth. I mean, how do we assess this continued weakness in China with really no roadmap to get it better anytime soon?
Sure. And you know, when I say that Apple still faces near-term challenges, I would put China at the top of that list. So what did we learn last night? You know, we did learn that China revenue was down 11% year over year off of a negative 13% year over year compare. So not a good performance in the quarter. We also did learn that demand in China was better than revenue because Apple drained channel inventory in China as some of these local subsidies took hold at the end of the quarter. So China didn't necessarily perform as poorly as the headline number would imply, but China is still down, right? There is still a challenge that Apple faces in China. It's why I posed the question, is this an issue of Western technology falling out of favor, or is this simply Apple doesn't have Apple Intelligence in China, and therefore there isn't a strong reason for upgrading? The work that we do, the survey work that we do, would push back on the threat of domestic operators taking share from Apple. It would support, though, the notion that Chinese consumers are looking for Apple Intelligence, but they can't have Apple Intelligence. And if they can't have Apple Intelligence, they aren't upgrading their iPhone. And what that means is that not upgrading your iPhone leads to iPhone revenue declines. I think that is the challenge that Apple faces. And what we did not hear last night is any real concrete timeline for when Apple Intelligence does come to China. We know that Apple Intelligence will support simplified Chinese starting in April. That's a good step forward. But Scott, you need Apple Intelligence in China. Consumers in that market want it, but until they get it, I do think that that China faces a challenge, unless, of course, either subsidies work or discounting does help to drive demand.
Can you get even to your base case of 275? Again, I said your top case, your bull case was 350. Yeah. Can you get there if China just remains this prolonged weak spot?
You can't get there if China remains on the decline in fiscal year 26. It's the single biggest risk that I think about when I think about my iPhone unit forecast. Can you get there if China is flat to slightly growing? You can, but you need a really strong Americas. You need really strong emerging markets. If we said that China was growing, say, 5 to 10%, I think that Apple would have it in the bag. That's kind of how I think the different scenarios associated with it. But again, the challenge is it's kind of incumbent upon Apple now to bring Apple Intelligence there. Right now, Apple faces challenges. It is not in the leader seat, so to speak, when it comes to accelerating replacement cycles.
All right, I appreciate your time as always. We'll see you soon. Good weekend, Eric. Thank you.
Thanks so much, Scott.
That's Eric Woodring, Morgan Stanley. Up next, noted value investor Scott Black is standing by. He's going to give you his top stock picks right now, right after the break.
The Bond Report is brought to you by PIMCO. The Bond Report is brought to you by PIMCO.
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money. Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
The climate crisis is a gun to our head, so we better get our act together.
We meet those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their
right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, oh, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future, but only if we take action, and take action now.
Join the sustainable future, only on CNBC.
Welcome back. Value stocks off to a pretty good start this year. The question is, where are the best opportunities right now in that space? Let's ask Scott Black. He is president and founder of Delphi Management. It's nice to see you. Welcome back.
Thank you for inviting me.
We'll get to stocks in a moment, but generally speaking, how are you feeling about value when the week itself here was so dominated by questions about growth stocks?
To be frank with you, if you look from the statistics from 2007 on, value has systematically led growth, and large cap has dominated mid cap and small cap by a wide margin. But what we do is we're bottom-up stock pickers. We're indifferent whether it's large cap, small, or medium. We're just looking for high return on equity companies that generate cash that can be bought at low valuations. So that really hasn't changed over the years for us. So it's not about picking the homogeneous risk class that's going to do well.
I think that's why our viewers like hearing from you. You cut through all the noise and just get to bottoms-up stock picking. Let's talk some names if we could. You have some stock picks for our viewers. SNX, TD SYNNEX. Tell me about it.
Yeah, it's probably the quietest $61.6 billion revenue company that nobody ever heard of. It's an IT distributor. It's based in California. And essentially, they distribute computers, peripherals, etc. They also have a manufacturing process called Hive, H-Y-V-E. I've been to it. I actually visited it, where they configure basically CPUs and GPUs for companies like Meta, for example, and that's a better business. So the company should do approximately $12.85 for the coming year. That's based on our own model. The stock is around 141, which places it at an 11 multiple. If you want to take out the 80 cents in stock-based comp, it's in about 11.8 multiple. The company will do about 13% return on equity and about 10% return on total capital. And over the last few years, they generate more than dollar for dollar in terms of free cash relative to net income. The last couple of years, they've generated over $1 billion in free cash, and they bought back $1.2 billion worth of stock. They have a deleveraged balance sheet to begin with at 0.35, and it's a BBB minus, so it's an investment-grade company. So there are two divisions to the company. The first division are mundane businesses like selling PCs and iPhones, and that constitutes about 43%. The more upscale thing is configuring. It's doing stuff like networking and cyber. The Hive business, which is making upscale computers, GPUs, that's about 57%. That business has much better margins. That does gross margins over 8%, whereas the regular distributions are 4.4%. So overall margins are lifting as they go more into the advanced business. And now somebody's going to ask, because we just see retaliatory tariffs coming, are they big in China? The answer is no. They only have about 6% of their business in Asia. Most of it's Japan. They have almost no business in China, so you don't have to worry about doing business there.
Okay.
The bulk of the company is in North America, 60% of the sales, and Europe's about 33%. So I guess, you're buying something at 11 multiple, top line revenue growth is 5 or 6% this year. Bottom line is about 10%. It's pretty good value considering the S&P multiple is 23 times. You're getting it at half the multiple of the S&P 500.
All right, let's do one more. Ultra Clean Holdings. The ticker there is UCTT.
Yes. We already own Applied Materials, KLA, and Lam, but those were all 19 to 23 times. This is a surrogate play. They're big with both AMAT and Lam. Lam is their biggest customer, 31%, Applied Materials, 21%. What they do is they make subcomponents for AMAT and Lam. These are critical things like gas chromatography, chemicals, that type of thing. There's not much competition for them except the parent companies themselves occasionally do it, but they're outsourcing it. There's a little company called iCore, which is about 40% the size of Ultra Clean. On a multiple basis, it's a $36 stock. We think they're going to earn $285 at the low end. That's my own conservative estimate, having spoken to the management. It's about a 12.7 multiple. The return on equity on this one is 14%. The net debt equity is about 0.19, so the return on total capital is 12%. This is a smaller company, only has a 1.6 billion market cap, but they're still generating about 125 million in free cash. It's a well-run company. I've had the management visit me in the past, and I think it's a decent value. It's selling at roughly 7 multiple points lower than AMAT, KLA, and Lam.
All right, I appreciate it. We'll talk to you soon. Scott, thank you.
Thank you very much. Have a nice weekend.
Yeah, you as well. That's Scott Black. Up next, we track the biggest movers into the close today. Pippa Stevens is standing by with that for us once again. Hi, Pippa.
Hey, Scott. Well, investors are not shopping for one retail stock after earnings. The name that's down double digits coming up next. To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school. I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make the decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today. Frank Holland, Worldwide Exchange, CNBC. Real money, real debate, real-time moves. Scott Wapner and the Halftime Committee break down key trades. Get an edge on the market's next move. Halftime Report, live from the New York Stock Exchange. CNBC.
If you have 1,200 people dancing, and you're capturing the heat from those people dancing, you can heat about 70 houses. So it's quite significant.
This venue in Glasgow uses the same techniques as geothermal energy, a low-carbon technology capitalizing on the Earth's energy stored underground.
The body heat system is a heating and cooling system that captures heat from a venue here, SWG3, cools down the space, keeps everyone the right temperature by taking that body heat out through some heat pumps in a plant room and then into an array of boreholes, charging up those boreholes as a big thermal battery in the ground. And then during the week, during the day, when the venue needs heating, we pull the heat back out through the heat pumps and back into the venue.
It's like, come here and dance, do what you do every Friday, Saturday night, and you're playing your part.
Sponsored by
the biggest interviews and most crucial conversations on the world's pressing issues. Catch highlights from our unmissable coverage of Davos 2025 this weekend on CNBC.
We're now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down the crucial moments of this Friday trading day. Plus, Angelica Peebles tells us about two big movers in healthcare. Ricky Stevens with the main takeaways from big oil's earnings. Mike, we begin with you. All right, I mean, we knew tariffs were coming.
Yeah.
And if this is it for the, at least the beginning, the market seems to be dealing with it reasonably okay. It's not a dramatic.
No,
it's
not dramatic in terms of magnitude. It's a 1% drop intraday from the highs. I think there was a sense out there that maybe the notion of imminent tariffs was at least a cap on the market, but not necessarily something that all of a sudden absolutely undercuts the bull case. The thing I would be aware of, I mean, I mentioned earlier about this absolutely tenacious retail investor bid in this market, and it has really kept things moving, especially on the tech side, crypto, all the rest of it, as professionals maybe have backed off a little bit. And then the really Baroque rotations that we've seen, right? Majority of stocks being down on a given day when the index is up and vice versa. They're all healthy as long as they last. Otherwise, it could be, if they exhaust themselves, it could be fragility out there in the market. And, we're up 3% for the month. It's really being down 1% for the week on the S&P 500 is probably a net win when NVIDIA completely broke down and you had some kind of underwhelming results from Apple and Microsoft, and yet you kind of powered through. So, yeah, I agree. It's not a game changer. And by the way, it's almost like the threat of tariffs might be worse than the reality of them if we finally get there. But it does keep the market from getting too comfortable.
Yeah, Alphabet, Amazon next week. So we still have a lot in front of us. Angelica Peebles, we do have two big movers in healthcare. Tell us.
Yeah, Scott, two of the names we should look at today are Vertex and AbbVie. Now, let's start with Vertex. They had their drug for acute pain approved. That drug, Jernavix, came with a broad label, and there was a little bit of, some concern that the FDA would limit it and to only be used after surgery. And so that broad label helping, the company did price that at $15 a pill, which was in line with what people were expecting. So really good news on both fronts there. And then AbbVie, they raised their long-term sales outlook for Rinvoq and Skyrizi by $4 billion. Now remember, these two drugs are the key to life beyond Humira, and that was AbbVie's biggest drug, and that started facing biosimilar competition in 2023. So they've had a lot of questions about what's next, and now it looks like they have an answer. Scott?
Angelica, thank you for that. Pippa Stevens on these moves in energy today. What do you see?
Yeah, Scott, well, profits have come down substantially for Exxon and Chevron amid softer oil and gas prices, but a bit of a divergence for the two. Exxon beating on the bottom line, helped by strength in its international upstream, notably Guyana, as well as cost cuts. A miss for Chevron, however, thanks to weakness in the refining business, which did also impact Exxon. Now, Exxon CEO Darren Woods was asked about DeepSeek on the call, saying it hasn't impacted the conversations to date that they're having with their customers, adding there is still a lot of interest in gas and carbon capture for data centers. And for Chevron, the Hess acquisition is still an overhang, with CEO Mike Wirth telling Squawk Box today that he remains confident Hess will prevail in the arbitration, saying there is a line of sight to resolution later this year. Scott?
Okay, Pippa, thank you. Pippa Stevens. We're getting more news out of Washington. A busy afternoon. Megan Casella joining us now with these new details. Megan?
A few more details, Scott, on tariffs. The press pool is back in the Oval Office right now with President Trump. We have not yet gotten the tape feed from that, but just based on the headlines that we're getting from the wires, it appears that he's saying now that oil and gas tariffs will take effect by February 18th. It is not yet clear if that is only on Canada and Mexico, or if Canada and Mexico oil and gas tariffs could be earlier, but we will be getting some oil and gas tariffs, he says, by February 18th. He's also saying that nothing can forestall at this point those tariffs taking effect on Canada, Mexico, and China by tomorrow. He also says those 25% and 10% levels, respectively, could increase. And then he's also talking about additional tariffs. It looks like he mentioned steel, aluminum, copper, and pharmaceuticals as different commodities where he might be considering further tariffs as well. Scott?
Okay, Megan, thanks for that update. Megan Casella, got about a minute to go. We obviously are red still across the board. We'll see what we do as we creep here towards these final minutes of trade. Not a big surprise about this either.
It's not a big surprise, although it is very telling that, people woke up to this story in the Wall Street Journal saying, oh, maybe the president had been persuaded to kind of defer any decision till March 1st. So you still see the internal tension. You still see the residual hope among some short-term traders that maybe we can avoid it. Maybe it really is just posturing. I guess not. In reality, you have to just pay attention. The volatility index was in free fall for much of the week, and it has just perked up ahead of a weekend because you have to be aware of the swinging headlines.
All right, you have a good weekend. Thank you for everything this week. That's Mike Santoli, all of you as well. We'll see you on the other side. Earnings and really getting into the bulk of earnings season, and then we'll continue to follow the tariff story as well. Into overtime.
Well, that bell marks the end of regulation for the week. Church and Dwight ringing the closing bell at the New York Stock Exchange. CME Group, Invesco, and ProShares doing the honors at the NASDAQ. A downbeat finish on Wall Street as the specter of fresh tariffs looms. Stocks mostly lower for the week after the DeepSeek volatility, the Fed meeting, and a wave of big tech earnings gave investors plenty to consider. That's the scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Fort with Morgan Brennan.
Well, coming up this hour, Liz Ann Saunders from Charles Schwab joins us with her take on where stocks head next as we wrap up trading for the month of January. Also the biggest catalysts investors should be watching now.
Plus, we'll talk to Joe Livornia, the former chief economist of the National Economic Council in President Trump's first term, about the fast-moving tariff situation in Washington.
And Reddit co-founder and venture capitalist Alexis Ohanian will join us to talk about all of the tech headlines from this week, including DeepSeek's emergence and his new investment in genomics company Nucleus.
Well, as always, let's start with the market and this late-day pullback on these tariff headlines. Let's bring in Charles Schwab, Chief Investment Strategist Liz Ann Saunders. Liz Ann, happy Friday. Good to see you.
Happy Friday to you too, John. Thanks for having me.
So we've had market attention shifting from rates to DeepSeek to tariffs. When are investors going to know whether to treat tariffs more like a global reality or a negotiating cudgel, and how to factor that into their investing strategy?
Does the I don't know emoji work here in response to that question? I have no idea. Nobody has any idea. So I think this is not yet. I mean, we now know the date is a little bit earlier than what even some within the administration had suggested when, as of yesterday, even this morning, it looked more like an early March thing. Now it's an early February thing. So this is a moving target, and is one of the pages from the 2018 playbook that I think is applicable this time. It's just the manner by which policy gets announced, often by social media, shooting from the hip sometimes. I think the background conditions are a lot different than what existed in 2018, but that is going to be a volatility driver. But you also mentioned the others, in different segments of the market. I think small caps to some degree are at the mercy of what yields are doing. Obviously, individual stocks are impacted by earnings. The misses have been hit disproportionately relative to the beats getting rewarded. So there are a lot of different forces driving different segments of the market. I don't think that changes anytime soon.
Zooming out to the macro and the consumer, data showed that personal spending is above personal income for a second month in a row, and we know more consumers are having trouble paying off their credit card bills every month. Is that a yellow flag, you think, for anyone?
Maybe a mild yellow flag. If you look at debt levels of any variety, revolving, non-revolving, you can look at it in an absolute sense, but you also have to look at it from a ratio perspective, whether it's relative to income, relative to net worth, relative to assets. And on those metrics, the numbers don't look quite as ugly. But certainly, you've got a bifurcated consumer, and those down the income spectrum, particularly given all the excess savings in that cohort has been worked off. They don't have that traditional savings. Even the savings rate broadly is down to only 3.8%. So I think what will keep the consumer afloat is consistent strength in the labor market. I think that has been the most important pillar for the consumption side of our economy. Job reports are always important, and next week's is important, but I think really keeping an eye on the labor market is key, not just in terms of the consumption side of the economy, but obviously because of Fed policy as well.
Liz Ann, I mean, I would say it's a spicy start to the year here, given the fact we did see that pullback in stocks halfway through the month. It's kind of incredible. We're actually finishing the month with all the major averages higher, even though we're lower this week for the S&P and the NASDAQ. But if you look at a one-month chart of the S&P and you put it up against a one-month chart of the 10-year Treasury yield, it is almost a completely mirror chart from an inverse standpoint in terms of where we saw the highs for yields is where we saw the lows for stocks. So clearly we started the year with stocks taking their cue from the bond market. Is that something that continues?
I do think it does. And I think it's both a function of level in terms of, say, the 10-year yield, but also speed of moves. And in particular, as you go down the cap spectrum, given that smaller companies have more variable rate debt relative to many of the larger companies that have actually benefited from a higher rate backdrop because they're earning more interest on their cash and they're paying interest on their debt. So I think swift moves up to the extent we get it in yields, not to mention levels like 4 3/4, certainly 5%, probably has a disproportionate impact in a negative sense down the cap spectrum. But I do still think it's one of the things in the driver's seat for the equity market even broadly.
Gold's record highs again this week, another strong month, especially in the midst of all this uncertainty around things like tariffs. Is that something you buy into here?
Yeah, so I'm not a gold expert, nor would I necessarily classify myself as a gold bug, but I think it represents not so much an inflation hedge, and I use that word somewhat generically, not specifically. I think what gold is represented in precious metals, maybe more broadly, is a way to protect a little bit against geopolitical uncertainty, and that would be inclusive of tariffs because of the multilateral nature of them. So I think gold does make sense in a portfolio. The one thing to be mindful of in areas like that, whether it's precious metals, whether it's commodities, even in currencies, is there's a lot more day-to-day trading in these asset classes, including by individual investors, which means you've got to bring a sentiment component of the analysis in there. You can get swings that maybe move outside the bounds of what the fundamentals would suggest simply because of sentiment. And I think that needs to be a factor taken into consideration for investors going into those alternative asset classes.
Liz Ann Saunders, thank you for joining us.
My pleasure. Thanks for having me.
Great to kick off the hour that way. All the major averages finishing lower on the day, but tech stocks getting hit today as well, with NVIDIA taking another leg lower and Apple giving up its post-earnings gains. Let's get to Mike Santoli now for more on the mega cap moves. Mike.
Yeah, Morgan, it was an interesting week in terms of investors trying to shuffle the big players around in terms of who was a net beneficiary of this latest phase of AI development. And here is a chart of the four big ones, not the big four, going back to when ChatGPT was introduced, right? The end of November 2022. I want to see the cadence of outperformance and then underperformance by some of these big names. So Microsoft in orange here, you see in the first 14 months, it was considered just a clear leader. There wasn't much dispute that they had some kind of a head start with the OpenAI relationship. First 14 months of this phase, and they are a clear leader. Since then, flatlined, and obviously this week have suffered a little bit. You have Apple, which was sort of riding along and then did nothing. This is in black right here. Just did nothing for months on end until getting this boost this week after the DeepSeek, and then just not to go one by one. But Google, perhaps surprisingly, because it was considered a net loser at the very beginning because search was vulnerable, is absolutely a winner, along with Meta to some degree, developing their own and also touching the customer with AI. And then IBM invited to the party just this week. Now take a look at a good proxy, in my view, for really fervent retail investor sentiment and momentum and activity in this market. Robinhood and Palantir. Palantir is an absolute retail favorite, one of the most avid and aggressive fan bases among retail investors as opposed to professionals. And you see it's basically been the same chart as Robinhood, which is itself a leveraged play on retail investor interest in stocks, options, and crypto. So, this is getting pretty heady here, 380, 420% one-year gains. You got to see if this sort of persists or exhausts itself. Finally, JP Morgan tracked the correlation on a daily price basis between small cap technology stocks and Bitcoin and showed that it was rising. So this is another way of visualizing kind of retail investor flow within this market. It's not quite back up to where we were here at the sort of peak of both the 2021 surge and then the 2022 bear phase, but it shows you that these things are walking together to a large degree, Morgan.
I'll note we're going to get Palantir earnings right here on Overtime on Monday. But I'm glad you brought in that chart about small cap tech versus Bitcoin, because I was going to say the Bitcoin piece of the puzzle is very similar to a Palantir or Robinhood too, and not just in terms of the cryptocurrency itself, but also some of those Bitcoin and crypto adjacent stocks.
Without a doubt. And, I always say that it's really about people who kind of own a lot of the same things, or the same crowd has a similar feeling about this, and they're willing to be enthusiastic about some version of the future that are represented by these assets. And that's what we're seeing right now. At some point, it can boil over. It can get a little bit of be an overshoot. But right now, it's not clear to me that this in itself is a source of instability or fragility in the market. We'll have to see.
All right, Mike. We'll see you again in just a bit. Now we're getting more information on President Trump's tariffs. Megan Casella has the latest details. Megan.
John, a number of headlines flying right now out of the Oval Office where President Trump is speaking with reporters. We're reading these off of the wires as they're coming. So what we're learning now is that President Trump says nothing can forestall those tariffs from taking effect on Canada, Mexico, and China sometime tomorrow. It'll be 25% on Canada and Mexico and 10% on goods imported from China. On oil and gas specifically, he says that Canadian oil, there will be an exception here. The tariff on Canadian oil will be down to 10% instead of 25%. He also said that broadly, he's looking at imposing oil and gas tariffs by February 18th. And then he's talking a lot about tariffs overall. He mentioned steel, aluminum, copper, pharmaceuticals, and the entire European Union as areas where he's considering future tariffs, though no specifics on those just yet. And then a couple other topics coming up here as well, John, in addition to the tariffs. He did meet earlier today with NVIDIA CEO Jensen Huang. Trump calls him a gentleman, said they had a great meeting. We know that they were talking about artificial intelligence policy and that it was meant to be a sort of introductory meeting between the two men. So Trump's saying now that it was a good meeting and we can potentially get more on that as well. John?
All right, Megan, yes, I'm hearing from those close to this that this was actually planned, the meeting between NVIDIA CEO and Trump a couple of weeks ago. Thank you. Well, coming up next, in defense of tariffs, we're going to talk to Joe Lavorgna, the former chief economist of the National Economic Council in President Trump's first term, about why he says tariffs like the ones being threatened on Canada, Mexico, and China will not end up being inflationary.
And don't miss our conversation with venture capitalist Alexis Ohanian on the big tech disruptions this week from China's DeepSeek and on its new investment in genomics company Nucleus. We have a lot more show left. Overtime's back in 2.
CNBC. Live ambitiously.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation.